Look at the two players. WestRock is undergoing what they call strategic transformation. They're trying to, boost their margins versus their peers. Their margins trail their peers. They undertook a transformation program, and it may be going a little bit slower than they want to. Smurfit Kappa doesn't have a presence in the U.S. This gives them a large presence in the U.S. Smurfit Kappa's margins are about 300 basis points higher than WestRock's. So, and they undertook their journey about 7 years ago. They started a capital improvement program, and now they're at the end of it. And, from what the executives laid out on this morning's call was, we think we can help WestRock on their journey and combine the companies going forward and boost WestRock's margins, bring them more in line to what Smurfit Kappa is.
So one of these companies I never heard of before, WestRock. The other one, I never knew what they did, Smurfit Kappa. Now they're going to have a combined annual revenue of $34 billion. What do they make?
They make basically pretty much predominantly just cardboard boxes.
See, I told you it's a cardboard box company.
I mean, yeah, but iPhone boxes,
the gamut. The
Tiffany
gamut,
boxes.
The gamut from,
just regular U-Haul boxes.
U-Haul, the gamut. They go all the way across the universe to the cardboard box that Amazon puts on your, probably the 3 cardboard boxes that Amazon puts on your doorsteps, the big one to protect everything, and then the smaller ones in. And they also make all the way down to those very more brand, where retailers are trying to get more brand experience. The other big thing that's driving this is, especially more so in Europe, is the way away from plastic packaging. So, for example, one of the big products that WestRock's just really introduced was a thing to do away. Remember when you used to buy a 6-pack of beer and it had the plastic rings? They have a product that does away with the plastic rings.
I use that, and that is a great product because it's so much easier to get the cans out of there. So that was brilliant.
What you mean the black plastic caps that go on top of
No, but you buy a 6-pack of soda, instead of having the little plastic rings holding it, this is like a little cardboard top that just kind of holds them all together, and it's just very easy to take the can out of the little cardboard top or take the whole cardboard top off. Genius, whoever thought of that.
And less likely to strangle fish or whatever.
Yeah. Right. Which I've been cutting those up since I was a little kid, the little things.
Good for you,
So
Paul.
I tell you, I do my part.
Who cares?
The packing business, I mean, talk to us just about the corrugated box business. There's pre-pandemic, there's huge demand. But then the pandemic hit, then everybody that got stuff delivered. Talk to us about the last 3, 4, 5 years in that business.
Well, we've gone from pre-pandemic where, historically the packaging business kind of GDP type growth.
GDP growth, okay.
Pandemic hits, everybody's at home, nobody can spend money on restaurants or food or travel. Well, you got to spend money somehow, so you ordered goods over the internet.
Yep.
Everything came to these boxes. So the box, over a 2-year period, went from GDP type growth to about 8-9% growth. Then what happened, it totally reversed because everybody, after the pandemic was over, everybody had what they call revenge travel and everything. And we've been in a downfall. In fact, we're actually back to almost pre-pandemic levels.
Okay.
So there's been, but the bigger push longer term is, again, back to sustainability. Can we replace plastic packaging with cardboard?
You know what? Way back in the day, I had an investment in a box company, like just this, southeastern U.S., never made a dime on it. And then I sold back my stake. Then this company named Amazon came out. I was like, oh, I missed it.
And bought them or what?
No, just kind of came out and said, we're going to start shipping everything to you. And of course, then this company's value went through the roof. All right, we got a potential strike coming out of the auto business. If they're not making cars, does that mean they don't need steel? In which case, we're going to have some issues with steel. Talk to us about how that might impact steel.
Correct. If you look at the auto market for the steel sector, auto demand, or the auto end market is about 25% of the steel market.
Okay.
So if we see that, and not only do you kind of have a ripple effect. Not only do the big car makers stop making cars, but everybody who makes parts the tier 1, the tier 2, the tier 3 suppliers stop making the parts too. And, in the difference between this strike possibly and the last strike is normally the UAW, you would only target one automaker. This time they're talking about maybe targeting all three. So we'll see if the rhetoric is definitely ramped up, and we'll see what happens.
What are the steelmakers themselves saying? Are they just kind of staying out of it and will say, well,
They've been quiet. The thing that was interesting, I thought, the second quarter on their earnings call, a few of them mentioned that they had anecdotally shipped more in the second quarter than they were expecting to the automakers.
Pulling it forward.
Which exactly tells me the automakers were like, okay, maybe we need to ramp up production and things like that. And honestly, you're not going to see, if they do strike their schedule, the contract expires this Thursday night at 11:59 p.m. We're already halfway through, halfway through the month, but you're only 2 weeks from the end of the quarter, so you may not see that big of an effect on this quarter on the steel makers. It will probably be more of a next quarter things. Also, the steel makers normally take some downtime, and they kind of rejiggered their downtime to kind of be going forward. So if there is a hit, that they're not as impacted as they might have been.
Interesting. I mean, do the auto guys, are they like a just in time with their steel? It's like I placed my steel order because I'm going to start bending it like tomorrow or next week or something.
Most of it all depends on where you're at. Like the big three are definitely probably more just in time.
Okay.
Where maybe some of the suppliers, tier 1, tier 2, tier 3 aren't as, everybody's trying to be just in time, but they probably do hold more inventory than the big three.
All right, so boom, we knocked out corrugated boxes and steel in one segment. How good is that?
Yeah,
you can do that
cars.
with Rich Burke. Why? He gets a bachelor's degree in engineering from Illinois. Then he goes and gets a master's in engineering, electrical engineering, and then he goes and gets an MBA from Chicago. You can't get the guy out of Illinois. All right, good stuff, Rich. We appreciate it from Bloomberg Intelligence. This is Bloomberg. All right, let's go to Lisa Mateo and get some company news right now.
Thanks, Paul. Google's antitrust trial is underway. The U.S. Justice Department, it kicked things off by saying the company pays more than $10 billion a year to maintain its position as a default search engine on web browsers and mobile devices, impacting competition. More from Bloomberg's Simone Foxman.
What the DOJ alleges here is that these agreements have essentially forced out some of Google's search's rivals, the likes of DuckDuckGo, the likes of Bing. That is predatory behavior by the monopoly. Google Search controls 90% of the market. Google, however, says consumers are just one click away from other search engines, and that its deals with these companies are similar to the ones that cereal makers, for example, strike with major grocery stores.
Now, shares of Alphabet are down about 0.5%. And shares of Oracle, they're really taking a beating after the software maker reported slower growth in cloud sales, but did express enthusiasm for AI demand. Bloomberg's Abigail Doolittle has more.
Overall, the cloud grew 30%, not so dissimilar from Microsoft, Amazon, Google. There was a subset of the cloud growth that was 64%. Doesn't sound so shabby, but the estimate was for 67% growth. Many analysts are saying that high expectations, that's really the story. Valuation got ahead of itself. Valuation on the surface wasn't so high, 22 times forward, but from a historical perspective to where Oracle usually trades, it was super high.
Now, Oracle shares right now down 12%. And eBay has now become the place to sell luxury handbags. Its new consignment service opened today for new and used items. Share of eBay right now down just a fraction. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets, continued red on the screen. The S&P off about 0.5%. NASDAQ off about 0.75% here. So a little bit of a sell-off here. Looking at the yield space, the 10-year Treasury, flat, absolutely flat. We're going to call it 4.28%. And we got a 5% print again. 5% even on the 2-year Treasury. We got to call out crude again. WTI crude oil up 2.1%, $89.14 on crude. Even Bitcoin is up 4%, 26,100 there. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Matt, authorities in Pennsylvania are still looking for an escaped murderer who has evaded capture for nearly 2 weeks. Pennsylvania State Police are urging residents in the area where Danilo Cavalcante is being pursued to lock up, secure vehicles, and remain indoors. Pennsylvania State Police Lieutenant Colonel George Bivens.
Cavalcante is considered armed and extremely dangerous. He is now armed with a .22 caliber rifle with a scope and flashlight mounted on it.
Lieutenant Colonel Bivens says at least one school district is closing all schools and offices for the day, and another in the area plans to keep students indoors. Cavalcante escaped from the Chester County Jail August 31st after being sentenced to life for killing an ex-girlfriend in 2021. New York commuters, welcome to Headacheville. The morning rail commute has been disrupted. New Jersey Transit says service in and out of Penn Station, New York, is suspended due to a minor slow-speed derailment. Midtown direct service is being diverted to Hoboken. Speaker Kevin McCarthy is set to endorse House Republicans' plans to launch an impeachment inquiry into President Joe Biden. A House of Representatives official familiar with his plans said this week McCarthy will tell colleagues that such an inquiry is the next logical step in their investigation of Biden and the business dealings of his son, Hunter Biden. North Korean leader Kim Jong-un is in Russia, where he's expected to hold a summit talk in a few days with President Putin. The U.S. said that they would focus on supplying weapons for Moscow's war on Ukraine. Bloomberg's Sang-mi Cha is in Seoul.
Putin definitely wants North Korea's help on the munitions. North Korea is one of the countries that has the largest stockpiles of weapons in the world.
Bloomberg's Sang-mi Cha says the summit between the two leaders marks the first time Kim has left the Korean peninsula since 2019. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Michael Barr, and this is Bloomberg. Paul, Matt?
All right, Michael Barr, thank you so much. We appreciate it. Bloomberg Markets today is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Coming up in the next hour, a great conversation. Mike Para, he's the CEO of DHL Express Americas. He's going to join us here in studio talking to us about the package delivery business, get a little read on the economy. Matt, UBS, they closed on their acquisition of Credit Suisse. Story today kind of got me a little bit here. UBS is planning to move some Credit Suisse staff out of the latter firm's offices in London's Canary Wharf as part of plans by the Swiss banking giant to integrate its former rival. They're going to bring them into the city of London, 5 Broadgate, which is a great building.
Broadgate
in the
Circle.
City. Yeah, that's
Very
awesome.
nice.
But when I went out to Canary Wharf with Credit Suisse back in the day in 2000, nothing was out there. It was just these offices, which were spectacular offices, but it was
In the middle of nowhere.
In the middle of nowhere.
Yeah.
And you're like, now you go out there and it's a thriving like town almost. I mean, there's apartments, people live out there, tons of restaurants.
That's exactly what I was thinking. So, you know, they have built this entire community out there, and I'm sure a lot of bankers who worked there have moved family and house to be nearer to their middle of nowhere offices. Now they're going to have to go back to somewhere, but they live nowhere still, right?
And
so they're going to have to kind of reverse commute. I don't know how bad that is. That happens to a lot of other firms.
Yeah.
Some people are based in Princeton, and all of a sudden they're based in New York.
Right. And the people who developed Canary Wharf are the same people who developed the World Financial Center down there, that whole area. And you can see the similarities in the architecture and the way they did it. But interesting. So Credit Suisse leaving Canary Wharf and heading back into the city of London. This is Bloomberg.
Is this guy dressed up?
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we will check in with Mike Parris, CEO of DHL Express Americas, get his thoughts on the economy and his business. Plus, Neil Grossman in studio, former Chief Investment Officer, TKNG, one of the smarter people we talked to. So we're gonna spend some time there. Barry Di Raimondo, founder of commercial real estate developer Steelwave, will join us to talk about the commercial real estate business. I just don't know where the values are of commercial real estate. We haven't seen many buildings trade to get a real sense. Maybe he can give us some color there. Let's kick this whole hour off with a good friend, Charlie Pellet.
Thank you very much. And here's what's going on, Paul and Matt. Red on the screen right now. We have got the Dow, the S&P, NASDAQ 100 index, and yes, the Russell 2000, all declining. Stocks are retreating. The dollar is rebounding as investors gear up for a key inflation report that is expected to bring more insights on the outlook for the Federal Reserve's next steps. Tech leading losses in the S&P 500. Oracle after earnings down now by 12.3%. That is the most since 2020 after a slowdown in cloud sales. Apple also trading lower before unveiling updated versions of its iPhone, smartwatch, and AirPods. Apple right now down by 1.6%. So here's where we stand. The S&P down 19 to 44.67, drop there of 0.5%. We do have the Dow Jones Industrial Average now lower by 38 points, a decline of 0.1%. NASDAQ lower by 0.7%, down now by 99 points. 10-year yield 4.28% with a 2-year. 5.00% once again on the 2-year. Spot gold down $9 the ounce to $19.13, drop there of 0.5%. Bitcoin rallying today by 4.2%, back above 26,144 on Bitcoin. And West Texas Intermediate crude being bid higher, up 2.1% right now, 89.12 a barrel on WTI. Well, Wall Street certainly looking ahead to tomorrow morning's inflation print when we get the latest reading on consumer prices and what it means for the Fed. Kathleen Bostancic is chief economist at Nationwide Mutual Insurance.
It does seem that the Fed's getting its way here. It's removing some of the demand, some of that froth, and yet, not crushing the economy. Time will tell how this plays out, but you even see the wage growth numbers, cooling.
And you can hear more of that conversation on the Bloomberg Surveillance Podcast. You can download it wherever you get your podcasts. Again, recapping, stocks lower with the S&P down now by 18, a drop of 0.4%. Oracle down 11.9% and ahead of the iPhone 15. Apple down 1.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. Matt Miller and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're also doing the streaming thing.
We haven't talked at all about the Jets game last night.
No, we haven't.
And I gotta say, I was pretty excited because my daughter, we put her to bed early, and I, cracked open a beverage of my choice and nestled into my chair, the dad chair.
Yep.
And as soon as I turned on the TV, he got sacked.
Yep.
Aaron Rodgers gets sacked and he's out. Now I'm looking at top 5 NFL highest paid quarterbacks here.
Yep.
Joe Burrow, Justin Herbert, Lamar Jackson, Jalen Hurts, Aaron Rodgers, number 5.
And how much did they pay him?
$50.3 million a year.
Yep. The New York Jets, I've been watching sports my entire life, by far the most cursed franchise I've ever seen anywhere in the world. I feel sorry for my Jet fans because they also happen to be mostly Met fans as well. So it's a tough life they chose or was thrust upon them. So I don't know how that really works there. So anywho, I looked up and I see on my video screen, I see Mike McGlone. I mean, what do I want to talk to him about? And then I'm like, and then I want to talk to Jess Smetten because I want to figure out what's going on in the market. Then I look down and I see oil's ripping again, so I figure let's bring in both Jess Menton, she covers the equity markets, and Mike McGlone, he covers all the commodity stuff for Bloomberg Intelligence. He's based down in Miami, and Jess is here in our Bloomberg Interactive Broker studio. Mike, since we got you, Miami Mike, let's talk to you. $89 for WTI crude? What's going on here?
Well, it's getting a little bit higher than I thought it would, but that's what markets are supposed to do. They can be irrational, get to extremes. But we're seeing some very good job owning from OPEC, and they're doing a great job for a part of the market that's actually less than a third of the market. Before, if the last big crisis we had in the financial crisis, they were 40% of the market. They're becoming completely diminishing as far as their significance in markets, but they still job own well. And they're job owning right now. They're getting the market to move higher, but it's also getting positions really long, which usually means they're going to go back down. Markets go down. You look at managed money net positions, basically it's hedge funds in futures. They're the longest in futures in almost a year. And the last time we were at this level was when it peaked around 93 in November. So I look at this as, yes, the market's bumping up a little bit, but what it's doing also, it's keeping the Fed vigilant to keep tightening. I see that in the WRP function in the terminal running around 40%. They're going to hike at that November meeting. And the bottom line is the market is tilting towards a recession on a global basis. And OPEC, I think, knows that. They usually cut supply into recessions. They see it and they're protecting for it. And as we get this tilt towards that recession, I'm very fearful crude oil is going to do what it always does. It goes down because it went up too much.
Hey, Mike, I'm curious, how long do you think it's going to take for some of these energy numbers to start feeding into the CPI numbers?
They have already. I fully expect you're going to see that in the CPI number. The gasoline number probably boosted it up a little bit. But ex-food and energy, stuff we don't need, it's going to be weaker. But that's the key thing. It's keeping the Fed vigilant in the overall numbers, in the core numbers, and in the personal, the key things, personal consumption expenditures, employment cost index, and stuff the Fed watches. So it's ticking it up for now, but that tick up is what's keeping the Fed's finger on that tightening button. So this, to me, is part of the lose-lose. It's part of that. It's actually a smaller spike, and I think what happened last year. So last year we had that big spike to 130. It dropped to 63. Now we're inching back higher again. I think that's just part of that overall trend since 2008 of lower lows and lower highs. And we've had 3 lower lows. Obviously, the 2020 at minus $40 a barrel was the lowest ever. Last year bumped up higher, and I think we're heading lower. The key thing is, as I fully expect Anna Wong to be right, our chief economist, that we're going to head to this recession. China's heading that way. Europe's already in recession. OPEC knows that, and they're doing a great job of job owning. But this higher price cure that always kicks in, I think, is going to be the worst case in the next few months.
All right. Just ESPN reporting. I want to get this out. ESPN is reporting that Jets QB Aaron Rodgers out for the season, so that is confirmed to be
for the full season.
Full season.
So, and he still gets paid, right?
Yeah, but insurance will cover that. The question is he going to come back next year, or just kind of say, all right, I'm done?
After, I guess it's a pulled Achilles. Is that what we're?
I think it's
torn Achilles. Sorry,
yeah.
torn.
Yeah, that's bad.
It's bad, but that means you're going to be okay next year, right?
Usually about 10 months is kind of the average. Some people come back a little sooner, but 10 months gets you back in theory for next year. But he has to decide probably, at my age, do I really want to come back? We'll see. We'll see how that goes. That'll play out. Hey, Jess, in the equity markets, what are you looking at these days?
Well, looking more specifically what energy stocks are doing today, the sector in the S&P 500 up about 2%, but if you look year to date, it's only up about 4%. But looking at some individual stocks under the hood, Occidental Petroleum, when you look at that stock ticker symbol OXY, up about 3% on pace for its best day since August 11th. Also, Marathon Oil up about 2.6%, so that would be its best day since September 1st. And then if you look more in the ETF space for the VanEck Oil Services ETF, that's ticker symbol OIH, that's up about 1.5% on pace for its best day since the start of this month, Paul.
All right, Jess, thank you so much. We appreciate it. Jess Menton covers all the equities for us at Bloomberg News, and Mike McGlone, our commodities strategist for Bloomberg Intelligence down in Miami. Let's talk about shipping boxes. We had an M&A trade in the corrugated box business. Who would have thunk it?
Smurfit Kappa buying.
Yep. 11 billion, so 11 large there. So kind of staying on the box thing and kind of moving boxes around. We have Mike Parra. Mike joins us. He is the CEO for the Americas for DHL Express. He joins us live here in our Bloomberg Interactive Broker studio. So, Mike, I don't know. Do you care where the boxes come from? It's your job just to move them, right?
Absolutely. Yeah, but I would say we would like to see less air inside those boxes. So that was a great interview, and I am in
So
complete
less air
support.
in the boxes?
Less air in the boxes.
What does that mean?
Well, I mean, remember, air takes up space.
Right.
And then also, when you got more air in boxes, you have a greater propensity to have damage.
Okay.
As well. So less air, less damage. Less air means we can put more boxes into our aircraft.
All right. What percent of your aircraft, I guess, what percentage full do they fly when they actually take off?
Oh, well, you're going to fly. You're going to fly. It's not going to be at full weight because that would be ideal. By the way, that means you're moving water.
Right.
As an example, but on average, our weight load factor is somewhere between 80 and 90% is where we're at from a weight load factor on an aircraft.
So, how does it look to you right now? Because you have a great position in terms of judging the U.S. economy, right? Are we still buying and shipping just as much stuff as we were last quarter or the same quarter last year?
Yeah, one of the great things that we're seeing as a result of what's going on globally in this move away from China, we're never going to decouple ourselves from China, but we are seeing, friendshoring, nearshoring, omnishoring that's taking place, and we're seeing a lot more outbound from the U.S., which is encouraging. It's encouraging for us, but we're seeing it predominantly in the space of e-commerce.
Okay.
So that's what we're seeing, which is fantastic. But what we have seen is we're starting to see that China plus one really starting to happen. As an example, near and dear to me, because it's within my region, is Mexico. And you're starting to hear this term made in Mexico.
Yep.
We're starting to see that in the northern part of Mexico. So, Guadalajara, Ciudad Juarez, those markets we're starting to see an explosion. Raw goods coming in, being assembled, and then exported out of Mexico, either back to the U.S., to Canada, or throughout the rest of the world.
Where does DHL Americas fly to? Where do your planes go?
Across the entire Americas.
Okay.
So we fly intra-Americas,
Okay.
and then out of the Americas to Europe, Asia, the Middle East, and Africa.
Are there certain airports that are hubs for you guys?
Absolutely. Yeah, our big air hub for the Americas is in northern Kentucky in Cincinnati.
Gotcha.
We're doing 90 departures in and 90 arrivals in on a daily basis.
How do you compete with, when you talk shipping in this country, everybody knows. I just moved here, by the way, from Germany. So
no problem.
For me, DHL was on my doorstep every single day. But now,
Thank you.
It's UPS, FedEx, Amazon. How do you compete with those big guys?
Yeah, we're not competing in the space of intra-U.S. So we got out of the U.S. Book of business back in 2007, going into 2008, because we wanted to focus on our core competency. And our core competency is international. So the world into the U.S. to the world. So that's our focus. That's the lane that we play in, and we have been extremely successful.
Is it getting harder or easier in terms? I actually have a lot of experience with those kinds of shipping as well. I'm constantly trying to get a set of triple trees from Italy to here, or shipping Olin's forks back to Sweden for something. So. It's difficult to deal with customs, all the different regulations. Is that getting easier or is that getting harder?
In reality, it's been the same. What is getting easier is through automation and digitalization. We clear 92% of our shipments are cleared in the air. So they're cleared by customs in the air. And then they're only really looking at somewhere in the range of 7 to 8% is what they're looking at. They're targeting those specifically. Now, you get that through having a great relationship and a consistent relationship that spans over a long period of time with customs, where the reliability of the information, the contents that we're moving, line up with the manifest that we're submitting to them electronically. So that part is getting easier. Where it gets difficult is when you have someone who refuses to give you the right level of information. An EIN number, the HTS code for clearance is wrong. Those type of things is where a shipment gets delayed. But 90 to 92% of our goods are cleared in the air. So that makes it easier. Whereas before, if you would have gone I started 37 years ago in this industry, it was much harder. It was much more of a manual process, much more of an open a shipment, look and see. Today, it's much easier from that perspective.
All right, so you ship from the Americas out to the rest of the world and back.
Yes.
Where are the growth areas versus maybe the not so growthy areas?
Well, we're seeing growth out of Canada. So in what we're calling friendshoring, Canada, the U.S., and Mexico, we're seeing a lot of growth. from that perspective. We're seeing growth in parts of Central and South America. As a matter of fact, we just launched our own dedicated flight now to Argentina. So we're starting to see growth, and it goes Miami, Argentina, Chile, back to Central America, and then back up to the States. So we're seeing growth in those markets as well. Every time we have a growth market, we'll come off a commercial airline and we'll put our own aircraft in place.
So what does that mean? You'll take some of your packages
off commercial airline where we were buying belly space before, and then we'll put it on.
Talk to me about that business,
Yeah.
which I never really understand. So what percentage of your business goes on an airline, and what goes on your plane, and how do you make that decision?
So thank you for asking that question, by the way. We're the largest commercial airline purchaser of belly space in the world.
Okay.
Through all of our entities from a DHL group perspective. The decision is made once you have greater than 50% weight load factor that you can put on your own plane, where you can start to pay for the physical asset up and down and the fuel that you have going into that plane. So the cost of operating an aircraft.
And fuel costs, I mean, right now, the outlook isn't great with, we're reporting that there's going to be a 3 million barrel a day shortfall in the next quarter because of the output cuts from OPEC+.
Yeah, fuel costs is interesting up and down, right? So fuel is always somewhere between 70 and 100, and we almost think that there's a reason for that. The interesting part about that is we have what's called the fuel surcharge, and that's where we take those expenses and we pass on the least amount that we have to our customers associated with it. But that's how we protect ourselves. And it either goes up or it comes down. And we protect the customer on the way down.
The other big cost is labor. How's that looking?
Yeah, okay. We're fine.
Because it was tough, right, for a couple years?
It was tough for a while. The good thing about now is we're replacing roles. We're hiring roles where we need to, which is a good thing. And we're getting ready for peak season, which is, by the way, in our opinion, is going to be a soft peak season. The uncertainty remains. It is going to be a soft peak season. It's going to be in line with what we saw last year. But really, the next couple of weeks are going to be very telling. The end of this month, the beginning of October are going to be very telling to see what's going to happen in peak season. Because really what starts to happen is people start to order in advance of Black Friday, Cyber Monday, and the lead up to the Christmas holidays. So we're keeping a close eye as to what's going to happen here over the next couple of weeks.
20 seconds. What kind of aircraft do you fly? And can you get them?
So we're flying 777s.
Nice.
We're flying 767s, 737s. And then we still have a couple 747s that are out there, 800s. Can we get them? Yeah, there's aircraft today that are available, much more aircraft today available based on the shortfall in volume that was out there and people standing down planes and right-sizing their network. We right-sized our network 18 months ago. We're constantly right-sizing our network, so it's not a new initiative for us at DHL.
Fascinating. I could talk about this stuff all day.
Yep.
Mike Parra, thanks so much for joining us. He's the CEO of the Americas for DHL Express, kind of getting a good view on kind of the economy and where we're seeing some growth and not so much growth. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
You got it, Paul. UPS has revealed more details about its union labor deal. Bloomberg's Steve Potisk has the breakdown.
Wages will jump about 10% in the first year of the 5-year deal, which took effect August 1st. Wage gains will be smaller in the subsequent years, averaging 3.3% per year over the life of the contract. When adjustments to pension, health benefits, and other expenses are included, UPS says it will absorb 46% of the deal's total cost in the first year. The company retains the ability to use new technology to boost efficiency.
Now, shares of UPS are down about 2.5%. The National Labor Relations Board is accusing Amazon of violating workers' rights. Now, that charge stems from a confidentiality agreement an employee had to sign to work in the company's drone program. The agreement prohibited the sharing of business and financial information, among other things. Shares of Amazon right now down about 1.5%. TikTok has launched its shopping service in the U.S.
The shop feature includes in-feed video shopping. TikTok says it's using a mix of technology and human moderation to enforce its policies and will remove merchants and products that break its rules. It also says that U.S. user data is stored in the U.S. TikTok is owned by the Chinese tech giant ByteDance.
And that was Bloomberg's Gina Cervetti reporting. And Endeavor Group Holdings has completed its takeover of World Wrestling Entertainment, creating a new publicly trading entity called TKO Group Holdings. Now, Endeavor, which operates Ultimate Fighting Championship, will own 51% of TKO, while WWE investors will own the rest. The merger will result in some layoffs. I'm Lisa Mateo. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Right now, we're going to go
It's
down
11:21 on Wall Street. We do check markets all day long at Bloomberg. We have got the Dow, the S&P, NASDAQ, all in the red right now. Stocks are retreating. The dollar is rebounding as investors gear up for a key inflation report that is expected to bring more insights on the outlook for the Fed's next steps. Tech leading losses in the S&P 500. Oracle now lower by just about 12%. We've got the S&P down 20, a decline there of 0.5%. The Dow down 9, drop there of less than 0.1%. NASDAQ now down 113, a decline of just about 0.8%. 10-year yield 4.28% right now on the 10-year. 2 years yielding 4.99%. Spot gold down $9 the ounce to $19.12, and West Texas Intermediate crude up 2.2%, $89.22 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Right now, let's go down to Washington, D.C. Representative McCarthy endorses impeachment inquiry into Biden, making some comments right now.
Nothing less. We will go wherever the evidence takes us. Thank you.
Those are the comments.
That was quick. So
to be fair, he had started speaking earlier. So
yes,
he said
exactly.
some other stuff, and he basically is, I guess, justifying the impeachment inquiry
right,
into President Biden. As Speaker of the House, that's something that he's going to want to push in order to appease his...
Is that going to happen every presidency now?
It seems... I've been thinking the same thing. Like, from now on...
Whoever's in power.
Whoever's in power in the House, if it's not the same party as the administration, is going to impeach the president.
Okay, so that's going to be like the normal course of business, maybe. All right, so again, McCarthy calls for formal impeachment inquiry into President Biden, and we will follow up on that, of course. All right, let's get back to these markets here, and let's talk. I guess this probably it may go over our head, Matt. But Neil Grossman joins us. He is a co-founder and former CIO of TKNG, one of the smarter folks we talk about in terms of where these markets are going. Neil, we kind of have a Fed that I guess is on hold here. What do you think the Fed will do? What should it do, do you think, based upon your understanding what's going on in the markets today?
Well, I've got plenty to say about that.
I don't think we have time for that.
Maybe I should keep it
as short as McCarthy.
We're going to go wherever the inquiry takes us.
Right.
Look, based on where they're pointing your attention right now, they probably will sit out for this meeting. However, there is rising risk. The expectations for CPI this month are high. The market's not paying attention to the fact that the relative expectations for CPI for the next 5 months should be high, because last year we had a series of months where inflation, headline in particular, was very low. So we're starting to see it migrate higher. I forget what the expectations take it, but it's going to go from 3.1 to 3.4, 3.5. I think this time it's expected that core is going to rise, but each of the next 4 or 5 months, there is going to be generally upward pressure. And if you look at what's going on in some of the commodity markets, particularly oil at this point, there is a rising risk on that side of pushing inflation up. And where I don't understand the lack of attention, for years, and even this chairman talks about the risk of a wage price spiral. It seems to me we're there. I mean, it's amazing to me that the auto workers, their first proposal basically amounts to a doubling of compensation. They want to get paid functionally 40% more and cut their work week by 20%. Forget all of the benefits.
I pitched that the same thing. It didn't fly.
Yeah, 46% even. I want to just point out, we talked with Phil Orlando about this yesterday. He was pretty adamant about the fact that inflation expectations are now going to be higher. We're looking at month over month. The last reading was 0.2%. This reading, we're looking for 0.6%. Year over year, the last reading was 3.2%. This reading, we're expecting 3.6%. And so that's going the wrong direction. Retail sales coming out the day after. On Thursday, we're expecting retail sales to fall from 0.7% in the last reading to 0.1% now. If you look at the ex-auto and gas number, from 1% in the last reading to negative 0.1% now. So,
be aware of the retail sales are reported nominally, not inflation adjusted. So if they're only up 0.1, but inflation is rising, the real number is actually much lower. We've talked about this.
My question though is, so now if this happens, if it turns out that inflation is rising and growth is falling, does the Fed choose to continue to fight inflation and not worry about the employment mandate?
Well, that's the point. Is employment is the mandate. Everyone tends to focus on growth and many times the equity markets. Employment is the mandate, but employment is still very, very low. Or unemployment is very low. Yeah. And so this is one of the reasons, again, you asked me what they should do. Number one, they should stop doing quantitative dribble and start doing quantitative tightening. They should have started to reduce their balance sheet actively. I actually think that would have been a far more effective process, number one. Number two, at this point in the hiking cycle, anybody who thinks they were aggressive, I will argue, totally non-aggressive. Their processes have been 20% effective, maybe, and you can see why the economy's continued to basically do reasonably well. Inflation has done okay, but it's still relatively high. Unemployment state. The bottom line is they should have been much more aggressive early on. At this point,
and they have raised the upper end to 550, right?
But it's
less than 2 years.
Yeah, but the process of again, you remember I have a term I told you we talked about this year. It's called infinitesimal incrementalism.
Yeah,
the slow process, and by the way, it's also asymmetric. When they want to act, cutting rates, it's like no tomorrow. But when they want to remove liquidity, everything, it's like Prometheus trying to push a boulder up a mountain. They don't want to do it.
Right.
And the problem is, you're now where you are. This would have been
they're a political animal, right?
I got you. This would have been far less painful. But let me get to the thing I wanted to talk to you about, because you're pointing out one of the things I mentioned. I believe there are what I call convexity events. I'm not the only one, of course, that are growing in probability.
What is a convexity event?
So a convexity event is when, number one, it's generally caused by a very large imbalance between risk positioning and outcomes, that force markets to move. The market can't handle it. So what you end up with is exaggerated movements. Now, they can go both ways. The NASDAQ bubble 20 years ago would have been probably considered a convexity event, as was long-term capital, as was October 1987. The problem is there are a few things out there. And
all of those events?
Some of them are connected, some may not be, and the timing is harder. The one I'm really worried about, the structure of the U.S. bond market and the way we hedge is built around certain instruments, primarily futures, so bond futures and the like. And the problem is the structure of the bond futures in the United States is built around a 6% implied coupon. And As you go up above or below 6% on the coupons, the duration of the future shifts dramatically. So the bond future itself, the traditional U.S. bond future, is a 15-year instrument as long as rates are below 6%, and a 30-year instrument basically above. And you can see the nature of what can happen by what happened to SVB, which was a drop in the bucket. But imagine the entire U.S. economic system finding itself underhedged the way SVB did in a way that you can't do it. Now, why? We have the inflation issues, number one, but you also have a major problem now with the U.S. government and its deficit problems. And to give you an idea, again, I find it amazing that people stay in their jobs like this. The Treasury, at the end of May, said they expect the third quarter borrowing needs to grow by about $770 billion. It's now almost 3 months, but as of mid-August, those estimates have gone from 770 to almost 1.2 trillion. They were off 50% in 6 weeks.
Okay, so what's the net of it all?
So, well, in the bond market, number one, if we begin to see long yields rise now towards that 6%, the need of the market to increase its hedging is going to grow. It's going to grow exponentially, and if you go through it, then the needs grow even further. And the question is, you already can't handle supply because the government has such growing needs. Corporate America is now beginning to need to refinance a lot of the low-cost debt. Individuals and all, you're talking about credit cards. So there is a massive congestion zone that if we begin to see rates move towards that, the catastrophe could happen.
What's a catastrophe?
How about everybody's worrying whether the 10-year note goes from 4.50 to 5? How about the 10-year note goes from 5 to 9 in 3 months? Now that's exaggerating, but I would say you go through 6%. 7 is a very high quick probability type of moment.
And that is more of a technical market move than a fundamental?
It's fundamentally motivated, but it's got a technical component in that because of this sort of convexity point in the bond market, that everyone's going to need to do a lot more. And again, I go back, look what happened to SVB when it woke up and realized it hadn't hedged a small amount of debt. I mean, SVB is the size of a flea compared to what we're talking about. So imagine that all of a sudden the government's now funding $3 trillion more a year. The corporate America, individual, and all of a sudden the hedging community needs to sell, let's just say, $1 trillion to $3 trillion of debt quickly. Wow. That's what I worry about. And by the way, the equity markets will have that problem. The yen is a potential risk on this as well. I mean, and credit spreads, which have been relatively tight, will also affect. So I'm very worried that these tight. It's not. What I would say is the probability of these events is growing, and will they happen? I don't know, but I think you need to be aware of that. Particularly if your views are like mine, which is the Fed is way behind, and even if they don't have to raise rates, that the long end is going to start to take more pressure.
Fascinating.
Drink a little wine, and then you won't worry about it so much. Neil Grossman, co-founder of TKNG Capital, joining us live here in studio, which we always appreciate. With our news in New York City, here's Michael Barr.
Paul, Matt, thank you very much. Speaker Kevin McCarthy is endorsing House Republicans' plans to launch an impeachment inquiry into President Joe Biden. He briefed reporters on his plans moments ago.
This logical next step will give our committees the full power to gather all the facts and answers for the American public. That's exactly what we want to know, the answers. I believe the president would want to answer these questions and allegations as well.
Speaker McCarthy. Escaped Pennsylvania murderer Danilo Cavalcante remains on the run this morning, with police revealing Cavalcante managed to get hold of a .22 powered rifle overnight. Lieutenant Colonel George Bevins of the Pennsylvania State Police says that there are multiple teams on the hunt for Cavalcante, and they are still treating him as they have been.
We have considered him dangerous right from the very start. It changes nothing.
FBI Special Agent Brad Garrett spoke to ABC.
If he's in a highly wooded underbrush area, you just have to be extremely careful. You could walk right into his rifle scope. So it adds tension and anxiety for the officers. They're all trained for this kind of stuff, but it makes it dicier.
Schools are closed in the search area, and residents have been warned via social media to lock their doors and windows. Amtrak and New Jersey Transit trains operating between New York's Penn Station and New Jersey are experiencing possibly significant delays due to a disabled commuter train, according to the rail operators. New Jersey Transit says rail service in and out of Penn Station is suspended. Amtrak says customers traveling between Penn Station and Newark may experience lengthy delays. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow now higher, up by 15 points. Little change, but in the green, up by less than 0.1%. S&P off session lows, down 15 now. Drop there of 0.3%. NASDAQ, the composite index, down 84 points. That represents a drop right now of 0.6%. 10-year yield, 4.28%. We have got the 2-year at 4.98%. Spot gold down $10 the ounce to $19.12, a decline there of 0.5%. West Texas Intermediate crude oil up 2%, $89 a barrel. Wall Street gets a key reading tomorrow morning on inflation with the release of the Consumer Price Index. But what about package delivery firms as not only an economic indicator, but also as an indicator of trade flows? Mike Parra is the president for the Americas of DHL Express, and he was a guest right here on Bloomberg Markets.
You're starting to hear this term made in Mexico. Yep. We're starting to see that in the northern part of Mexico. So, Guadalajara, Ciudad Juarez, those markets, we're starting to see an explosion. Raw goods coming in, being assembled, and then exported out of Mexico, either back to the U.S., to Canada, or throughout the rest of the world.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. And if you are shipping by sea, the head of the Panama Canal says the drought is likely to extend into next year, which will mean delays for ships transiting the canal. And briefly, Lyft is launching a feature that will try to prioritize matches between women and non-binary riders and drivers in response to demand for increased safety protections for its users. Recapping the Dow higher by 0.1%, S&P down 0.3. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, appreciate that. As always, Matt Miller, Paul Sweeney live here in the Bloomberg Interactive Brokers studio. We are streaming live on YouTube, so head over to youtube.com and search Bloomberg Radio, and that'll get you where you need to go. All right, so we had our guest on from DHL earlier. I could talk like shipping stuff around the world all day. I think it's fascinating.
We like logistics.
We like logistics. What we also like is commercial real estate, because I have no idea how this business is going to shake out. So we're glad that we have an informed guest joining us, Barry DiRaimondo, founder and CEO of SteelWave. He joins us live here in our Bloomberg Interactive Brokers studio. Barry, thanks so much for joining us here. What SteelWave, what kind of real estate do you guys play in, and where? We'll start there.
Well, we're West Coast based.
Okay.
Right, and the triangle is really San Diego south, up to Seattle to the north, out to Austin. It's all the tech hubs.
Okay.
And it's office, it's life science, and it's industrial.
All right, so office.
Well, you can't paint it with a broad brush, right? You when you say office, you're talking about 3rd Avenue here.
We talked about 3rd Avenue. And
yeah.
So now I understand that he's like in the real world.
Yes.
Austin, San Diego, stuff like that. How is office space in the real world outside of New York City?
Well, it's got its challenges, sure. I mean, look, you've got the capital markets issues with high interest rates and cap rates and, all the stuff that brings. But you've got that with multifamily or industrial. What you don't have in multifamily and industrial is the supply-demand headwinds that you have in office. And you're still dealing with work from home. So you've got all that stuff going on the office sector that, is candidly created an enormous dislocation, in that market.
So is office space, when you say life sciences and tech, I'm thinking about chip fabs and laboratories, but you're talking about actual office where the same thing could be done from home.
Yes. Yeah, look, on some level, you're competing with someone's couch.
Yeah.
All right, for office space. And in order to bring people back into the office, you got to create environments that people want to come to work in. And this isn't, post-COVID. This has been happening we started seeing the trends really in the early 2000s, and it's just magnified over time. But you got to create a work environment that's highly amenitized, where people actually want to come to work. And it doesn't feel like you're at work when you're at work.
So have you done that with your properties? And what have you done? How have you done? And has it worked?
Yeah, that's kind of our design theme. We're very much of a design-driven group. And it's adding hospitality, it's adding residential elements to it, so it doesn't feel like an office building, candidly. You know, we tend to cater to the innovation workforce. It's all tech, media tech, traditional tech, biotech, go down the list. So we're trying to attract the innovation workforce back to the office. And you have to create amenities such that people don't think they're in the office.
So when you say amenities, I mean, we think about Google ping pong table and snacks, right? But you're talking, I would guess, more about fitness, gyms, maybe restaurants, daycares.
All of that, right? Cool. And it's not just the run-of-the-mill stuff. It's creating kind of differentiated, food and beverage, options, full health centers, for people to take advantage of. What you're trying to do is bring people together. That's really what you're doing. So if you just create a gym and stick it off in the corner, that's not collaborative. What you got to do is amenitize the gym, and you got yoga classes, you got where people actually get together.
Do you have any evidence that if you do that, if you make that investment, which impacts your returns, if you do make that investment, does it work?
Unequivocally. Look, we're at a point in the market where if you don't make that investment, there's no rent that'll clear for a commodity
I hate
office
when I
building.
hear something like that.
I like it because I want to work in your office.
Yeah.
When I
But
hear
look at
about
our
that,
office. We got fish, we got food, we got flowers, look at this office.
well, we have a pretty great office.
We got the best, I think.
No
But
gym,
out there,
of
but I
course.
just think about driving out there in real America, which I do occasionally get off this island, and there's so many office buildings, and every single one has announcing how much space they have available there, and
all you got to do is look at the parking lot.
Yeah, that's right.
That's your biggest indicator. If there's no cars, guess what? There's no bodies.
So how do you guys in that office real estate, I mean, how do you think about your business? Have you taken your return parameters down dramatically? Because at the time you've got your properties, I'm guessing, have higher occupancies than pre-pandemic, and your cost of capital is higher.
I think that's right. I mean, the cost of capital is, at the moment, you got to understand, today is a dislocated market, so it's kind of upside down. So you can't look at what's happening at this very moment as a barometer to, the market in general. I would say a commodity office building, whether it's New York or San Francisco, today, if it had to trade, compared to, say, 18, 24 months ago, is trading at 40 to 30% of what it would have traded for. Oof. Not 40 to 30% off, talking 60 to 70% off.
Oh man, and I don't know how.
But that's a commodity office building. But what you do is different, and also the rents that you get are higher, I imagine, because if you create the kind of space that you're talking about, people will be bidding on that space and willing to and trying to outbid competitors, right?
Well, more importantly, there's a rent that'll clear. And if you're a commodity, there is no rent that'll clear. I mean, there's people think, well, I just lower the rents and my occupancy is going to go up. That actually doesn't work in office for a commodity office. If it's apartments, you lower your rents, your occupancy goes up. For office, depending on what kind of office you have, there may not be a rent that clears. And, it's a very bifurcated market. Excuse me. I mean, if you look at Hudson Yards, they're pushing rents up.
Yeah.
Right? But if you look at sort of mid-block, 3rd Avenue here, I'm not sure there's a rent that'll clear.
Wow. See, that's kind of where I think the market is, and that is brutal. Did they start knocking down office buildings around the country?
I would want to work in Hudson Yards.
Yeah.
And I would not want to work on 3rd Avenue.
See, there, I know, I guess. Before I would tell you, I don't care what you want. But now I have to care, right? I have to care. Again, Barry, you're another guy we could talk to all day long on this stuff.
Yeah.
Barry DiRaimondo, founder and CEO of Steelwave, based on the West Coast. Whenever you're back in New York, let us know.
I want to go out there and see his offices.
I know. We could do that. I mean, all right, so this guy gets his undergrad at Berkeley. Just awesome. Doesn't get any better than that. Then where's he get his MBA?
Cornell.
Ithaca, New York. Great town.
Gorgeous.
Love Ithaca. Ithaca's gorgeous. But it gets a little chilly there. So this California guy goes out there. He doesn't know what to do when January and February comes, but it's a great MBA program. Barry, thanks so much for joining us. We always love getting an update on what's happening out there in the real estate business. A lot of shakeout. Boy, this is going to be multi-year in the commercial office real estate market. We'll have more coming up. This is Bloomberg.
Thank you.
Let's get some company news right now. Lisa Mateo.
Thanks, Paul. The countdown continues before Apple's biggest event of the year gets underway. The company will unveil its iPhone 15, along with updated versions of the smartwatch and AirPods. Bloomberg's Ed Ludlow is in Cupertino and says the bigger picture for Apple is more bleak.
We've had 3 consecutive quarters of overall sales decline, apart from in Greater China, where there was a swing to top-line growth of 8%. Based on the guidance given on the call for this current period, it looks as if we're on track for a 4th consecutive quarter of sales declines.
Now, shares of Apple right now down about 1%. And shares of Oracle, well, they're really getting beat up after the software maker reported slower growth in cloud sales, but expressed enthusiasm for AI demand. Bloomberg's Abigail Doolittle has more.
Overall, the cloud grew 30%, not so dissimilar from Microsoft, Amazon, Google. There was a subset of the cloud growth that was 64%. Doesn't sound so shabby, but the estimate was for 67% growth. Many analysts are saying that high expectations, that's really the story. Valuation got ahead of itself. Valuation on the surface wasn't so high, 22 times forward, but from a historical perspective to where Oracle usually trades, it was super high.
Now, Oracle shares right now, they're down more than 11.5%. And McDonald's is getting rid of self-serve soda fountain machines from its dining areas. The fast food chain says it plans to phase them out by 2030. Now, it's already started in Illinois and some locations in the West. Customers will have to bring their empty cups up to the counter for a refill. McDonald's says it's because fewer people are eating in their dining areas. McDonald's shares up just a fraction. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets, a little red, a little green on the screen. S&P off about 0.3%, but the Dow's up 0.1%. So go figure. NASDAQ on the chin, a little bit down 0.6%. And again, yields kind of steady. The 10-year Treasury 4.28%. And again, the movement remains in the energy space. WTI crude oil up 2.1%, $89 a barrel there for WTI crude oil. So definitely some movement there, and we'll keep an eye on that. Right now, with our news in New York City, here's Michael Barr.
Thank you very much, Paul. Matt, Speaker Kevin McCarthy is endorsing House Republicans' plans to launch an impeachment inquiry into President Joe Biden. He briefed reporters on his plans moments ago.
This logical next step will give our committees the full power to gather all the facts and answers for the American public. That's exactly what we want to know, the answers. I believe the president would want to answer these questions and allegations as well.
Speaker McCarthy said an impeachment inquiry gives House lawmakers stronger standing to demand bank records and other documentation from the Biden family. Still no capture of the inmate that eluded authorities in Pennsylvania for nearly 2 weeks. Authorities say Danilo Cavalcante was spotted by a couple of people so far this week, and in one instance he was able to steal a .22 caliber rifle from a homeowner. Lieutenant Colonel George Bivens of the Pennsylvania State Police says that there are multiple teams on the hunt for Cavalcante.
Our law enforcement people have done an amazing job tracking him and locating him, that proverbial needle in the haystack, and they've located that needle repeatedly.
Schools are closed in the search area. Rail service into and out of Penn Station, New York has resumed and is subject to up to 60-minute delays due to a minor slow-speed derailment in Penn Station, New York. Midtown direct service is being diverted to Hoboken. NJ Transit rail tickets and passes are being cross-honored by PATH at Newark Penn Station, Hoboken, and 33rd Street, New York, and New Jersey Transit bus and private carriers. Jets fans have to be saying, oh my goodness, no. Quarterback Aaron Rodgers making his debut out for the season, according to reports, after he suffered a torn Achilles in his Jets debut against the Bills. Rodgers only lasted 4 snaps before being sacked and then grimaced from pain. The 39-year-old was taken to a medical tent to be examined as another legendary quarterback, Peyton Manning, reacted live on ESPN's Manningcast.
Is in the tent. He's not. He's hurt. He's hurt. Could not have been. Holy cow! I cannot believe this.
An MRI this morning reportedly confirmed the tear. The Jets did win in overtime, 22-16. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Michael Barr. This is Bloomberg. Paul, Matt.
Michael Barr, I need you to fix that New Jersey Transit thing for me, would you? Yeah, by sometime later this afternoon.
I'll get right on it.
All right, very good.
I got my hammer almost.
Good, very good. Michael Barr, thank you so much. We appreciate it. All right, coming up in the next hour, we're going to talk to Tors Hagen, CEO at Viking Cruises. I love the cruise business, so can't wait to get the chance to talk
Even
with
though
him.
you're not a cruiser.
Even though I've never been on a cruise.
Not yet.
Yes, not yet. I'll put it there. Plus, big day in Cupertino, California. Apple kind of coming out with some new products.
Oh, they are?
The phone. Yeah, I've heard about that. Anurag Rana, he's a senior tech analyst of Bloomberg Intelligence.
I
will
gotta
join
say,
us too.
it seems
talk about that. What is going on with our furniture
The
in here?
chairs are like continually breaking in here. I don't know. That's like the 4th time. I don't know. In terms of the Apple thing, do you expect anything cool?
No.
I've read all
what
of
I've heard
the scoops,
Yes.
and none of it seems exciting. I mean, titanium ring around the phone. Who cares?
Yep, I know. I think it's all. What I've been told is everything's gonna be incremental. You know, there's no big oh my goodness moment there. So that's kind of what we're. I mean, if there's gonna be something new, Mark Durbin from Bloomberg News will be the first one reported. Hey, on that Aaron Rodgers, I was just looking at the numbers. Rodgers recently reworked his three-year, $112.5 million contract with the Jets to include $75 million guaranteed for 23 and 24. That's according to ESPN. So I don't know. Somebody's on the hook for that 75 large.
Yeah.
But anyway, just a terrible, terrible story there. You feel terrible for him and for Jets Nation as well. All right, we're going to have more coming up. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to talk to cruising business. The CEO of Viking Cruises is going to join us via Zoom, so that'll be very cool. We're going to get a preview of what we're going to hear out of Cupertino from Anurag Rana, Bloomberg Intelligence. Then Adam Coons, portfolio manager at Winthrop Capital Management. I am going to talk to them, not we. I am going to talk to him about the markets coming up and what he's expecting with the CPI stuff. So that'll be a fascinating discussion.
Because I split early.
That's because you split early to go do your TV thing. That's okay. Charlie Pellet, though, he stays with us. He's got his news for us.
And here's what's going on. You guys talked about Apple. We've got Anurag Rana coming up this hour. Apple's biggest day of the year has arrived. The company is set to unveil updated versions of its iPhone, smartwatch, and AirPods just under 1 hour from now. Apple shares ahead of the big product announcements. Apple right now down by 1.4%. Stocks are now trading mixed, with the Dow Jones Industrial Average up 68 points, up by about 0.2%. The S&P, though, in the red at 44.75, down 12 points now. That is a drop of 0.3%, while NASDAQ is lower by 85 points, down 0.6%. Stocks are retreating as investors gear up for that key inflation report that is expected to bring more insights on the outlook for the Federal Reserve's next step. But what about the economic outlook? Monica Defend is head of the Amundi Institute, and she was a guest this morning right here on Bloomberg Markets.
When it goes to CPI and inflation, we think it is normalizing. It will normalize. It probably not in a linear way. Energy prices, recent prints on oil will have a positive contribution to headline, and the core will prove to be sticky.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Oracle, after earnings, certainly weighing on the tech sector today. Oracle is now plunging by 12.3%. 10-year yield, 4.28%, with a 2-year, 4.98%. Spot gold down $9.50 the ounce to $19.13, and West Texas Intermediate crude up 2%, $89.02 a barrel on WTI. MGM Resorts International's websites, including its reservations platform, do remain down after a cyber attack that began 2 days earlier. Recapping, S&P down 12, drop right now of 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Matt Miller and Paul Sweeney live here in the Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Radio. Red and green on the screen here. Let's get under the hood, see what's moving in these markets. We welcome Bailey Lipschultz. He covers all the markets for Bloomberg News. He joined us live here in our Bloomberg studio. Bailey, what are you looking at?
Yeah, seeing a risk-off day today ahead of economic data. Obviously, the story to the downside, Oracle down 12%. Worst day since March 2020. If it were to hold at that current level, it would be the worst day since 2002. Oof. So not a great day for Oracle. That coming after results, slowing cloud sales growth. Analysts really saying that maybe the rally got a bit ahead of itself for the stock. Other stocks we're keeping an eye on, banking sector, Barclays conference going on. Morgan Stanley right now up 3% after talking up being in the midst of a recovery in activity, saying that credit capital markets are performing well. To the downside, though, Northern Trust underperforming, the worst stock in the S&P 500 right now, down 6.6% after warning that net interest income may drop 10% in 3Q instead of previous expectations for 5%, which could hit EPS by nearly 10 cents. So looking at stocks moving to the up and downside in banking.
You know, it's interesting. You mentioned the more Morgan Stanley news. It seems like every day Bloomberg News has a note out, a story out on the investment grade market, just issuance going crazy over the last couple of weeks. I'm like, why are you issuing debt here when a year ago you could have done it at a fraction of it? But I guess
Well,
I'm told
they did it a year ago, too.
they did it the year ago too, is what I've been told, and they just kind of roll it over. So maybe that's good for the capital markets business for these guys.
Is September the biggest month for debt issuance?
I don't know.
I should probably know that, but I don't.
I don't know. I pitched it whenever guy picked up the phone. I'd be like, hey, let's hit the market here.
Hey, it's the best time to hit the market right now.
Exactly. That's how you do business. You make enough of those calls, you get a couple hits, and boom, there's your quarter. What else you got for us?
Seller in a biotech stock down 60% before
What's the ticker?
SLRN, coming after a drug study for a skin disorder, missed expectations. Competitor Moonlake Immunotherapeutics, ticker MLTX, up as much as 20%. This was one of the best performing IPOs in the 2023 class, obviously ahead of dropping 60%, now trading at a record low, worst day on record. Really confusing analysts, though, looking at the sell side reaction, calling dropout rates puzzling, saying they're not worried about the potential for that medicine in psoriatic arthritis. But when you're looking at a stock that, again, was rallying after pricing its IPO earlier this year, still about $1 billion, but down 60%. That is, Paul, as we've talked about in the past, that's the nature of biotech development, though.
Yeah, I mean, it's a binary play there. That's why the hedge funds love the biotech and the pharma things, because it is, if you can get what they call an edge in knowledge, however you get that, if you can get an edge, that's where you get these outsized gains. But man, is it a risky biz.
Really boom or bust. Another stock that's rallying, Zion's Bancorp, best performer in the S&P, up 7%, ticker ZION. That coming, again, comments about expectations at the Barclays conference, talking up those NII trends. So inverse of what we're hearing from some competitors like Northern Trust, it does seem like we're getting quite a bit of movement out of this conference, just given kind of updates that bankers and bank managements are seeing.
Good stuff. All right, Bailey Lipschultz, thanks so much for joining us. Bailey covers all the markets for us. Cruising. Now, I'm going to put this on the bucket list. I have to go on a cruise.
Yeah, you do.
You have to. You just have to try it.
I mean, for one thing, you got to be curious.
I'm curious. So I'll put that on the bucket list. But you know how I love the cruise business. I think it's a fascinating business model. And we've got a great person to talk to about that. That's Tors Hagen, CEO and chairman of Viking Cruises. Tors, thanks so much for joining us here. I got a million questions here, but I'd love to just get a real 30,000-foot view from you about how is the cruise business today versus pre-pandemic? It was just no industry in my mind, or you're one of the industries that really got impacted the most immediate and most directly. How has your industry changed?
Well, I can't speak so much about the industry, but I can speak well about ourselves. And you can say we are now back to a higher level of demand than we had before the pandemic. It's I've never seen anything like this in my life. So our ships this year have been full, and we are heading into 2024 with, I think, 70% of our capacity sold on our ocean business and 60% on our river business. So it's rebounded very nicely. Now, in your introduction, you meant that you're curious.
Yes.
And I think that's one of the reasons we're doing so well, because our guests are curious travelers. They don't go on a cruise to sit by the pool and get suntanned and so forth. They go places to experience and to relive history and so forth. And of course, Europe is a very big destination for us. So we hit it quite well. And we are kind of contrarian. So during the pandemic, we took delivery of, I think it was 16 new ships. And people said, you must be nuts. What are you going to do when this is over? And this year, we are filling it entirely.
So Viking Cruises is very different from the, Royal Caribbean kind of Disney. Yep. It's not, as you say, Tors, about, drinking a pina colada by the pool, and it doesn't matter where you are.
I don't object to drinking pina colada, but that's not why our guests go on cruises.
No, I just look at the destinations, and it's more about exploration for Viking Cruises, more about adventure.
Yeah, you can say it's exploration in the widest sense, because exploration is seeing places. But it's also, I call it the mental exploration, because our guests are mature travelers. They've seen most things in life, but now here's a chance of sort of reliving things they'd only read about before. So it's a great thing to do.
And when I noticed
and
that
we are different, we are so different from the others that a couple of years ago we even dropped cruises from our name. So we are now just plain Viking.
So
to sort of,
you know, what I understand about your business that, you know, is different from some of the others is you're not just ocean. You have a river cruise line and expedition.
Well, and I would imagine that's where the focus is, right?
Yeah.
Because
the two are about of equal size. We started as a river company in Russia, of all places. but we are now about 50-50, river and ocean. And the expedition business is very, very nice too. I took my first vacation 25 years over Christmas, and I went to Antarctica. And somebody asked me, where would you like to go next? I really like to go back. It was a phenomenal experience.
Talk to me about the labor, because so many industries have suggested that labor is one of the real challenges they face. Is that also the case with your company? And if so, how do you deal with it?
You know, if I say no, that's a little bit strong, maybe. But the point is that during pandemic, we took care of our staff. We didn't do like the others and sent them all home. We took care of our staff greatly. So we didn't have any problem starting up. Other travel companies have had big issues getting restarted, and we didn't have that, quite frankly. So I think we're quite different. You know, we are, I can call it, a family control company, but we have two financial shareholders too. But you can say we are not a conglomerate. We are not part of a conglomerate, and we can generally say that customers do come first. And when I say customers come first, maybe you should even say our staff come first. So we have very good ratings by our guests. They love our staff. Ships is one thing, but the way we deal with the staff and the way our staff deals with our guests is second to none. So we are very different.
I wonder a little bit about you and how this company started. You briefly alluded to the fact that I guess your first cruise was a river cruise in St. Petersburg, Russia, or at least the business started there, and now your headquarters, I believe, are in Basel, but you're clearly Norwegian. So how does this all work out? How did it all work out?
Yeah, well, I've had a long life in the cruise industry, and I've done a lot of things in my life. But my heart had always been with cruises. I ran a company called Royal Viking Line once upon a time, and I thought it'd be nice if we could recreate something like it. It was the cruise line of the times in the 80s, but somebody went ahead, bought it, and destroyed it. So I said, maybe I could have a chance of recreating it. But I've had a life, full of ups and downs, and that's called life in my vocabulary. And we're very pleased with where we are now, of course. It's been a phenomenal success. And we're doing it because there are some things that make us stand out. We have one brand, not part of a conglomerate. We have no children on board, no casinos, no nickel and diming, and then there's only one language on board our ships. So it's not this mixture of everything. We are very clear as to what we do.
So what are some of the popular destinations right now towards?
I say Europe remains, popular. And we have more than half our cruises involve Europe. And you can see even Europe in the winter is quite okay. Now we have, you can go to Norway and see the Northern Lights. The weather can be a little bit rough, but to see the Northern Lights from a ship in Norway is fantastic. Of course, the other thing we have is we have started an operation in Egypt. We were there now in a couple of months ago to take delivery of new ships. We have by far the greatest ships on the Nile River. I think we have 4 now, and we have another 4 coming. So the Nile is extremely popular. As a matter of fact, it's virtually sold out for next year, 2024. And it's pretty much sold out for much sold out for 2025 even. So we have now had to open 2026.
It's amazing.
It's nice
I've done a
spot.
cruise up and down the Nile. It's the only place I've ever gone on a cruise.
Yeah, I was there. It was 42 degrees centigrade. What's that? 104 Fahrenheit or something.
It's too
hot. It sounds terrible, but the heat is dry, and to be on the Nile and have the wind, the breeze in your face, it's. So we decided, hey, we can do this in August.
How has the Russian invasion of Ukraine at all impacted your business?
Yeah, we have, as I said, we started our business in Russia, so we still have 5 ships there. They're doing nothing. Of course, we have to take care of our staff so that when this will reopen, whenever that will be, they'll be ready to go. Of course, they need to feed their families too. So it's to have 5 ships doing nothing is not fun. It's not such a large part of our business anymore. And we have 1 ship in Ukraine. It has been in Odessa. It still is there, at least the last things I saw on television. But who knows? It's a terrible situation for everybody involved.
What about the China situation? Have you got, I know you have Chinese flags over some of your ships. Are they cruising?
Yes. We started in 2019, or a couple of years before that. In 2019, we had 4 river ships in Europe with Chinese staff, Chinese food, and Chinese signage, and the guests are all one language. That's sort of the mantra we have. When we do something, it's important that people travel with like-minded people. Then we have had one of our ocean ships that has become part of a joint venture with China merchants. That is now operating between Shanghai and Japan, and will be going between Shenzhen and Vietnam. But you can say the startup after COVID in China has been a bit slow.
Right.
But of course, when you look at the potential for the Chinese market, it's huge. We have had consulting firms assess what does huge mean, and when we look at it, it's huge.
I can understand.
So it's just a matter of being prepared to take some losses for a couple of years, and then we'll be off to the races.
All right, Tors, we're going to have to leave it there, but thank you so much. We really appreciate getting your time. Fascinating discussion. Tors Hagen, CEO and chairman of Viking. It's not Viking Cruises, it's Viking, so we're going to go with that. That makes a lot of sense. Fascinating discussion. We appreciate getting some of Tors' time. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Google's antitrust trial is underway. The U.S. Justice Department kicked things off by saying the company pays more than $10 billion a year to maintain a monopoly, controlling more than 89% of the online search market today. Bloomberg's Simone Foxman has the backstory.
Now, this really has to deal with arrangements that Google struck with various smartphone manufacturers, with the likes of Apple even, to make Google's search engine the default. Apple likely to get drawn into this in particular because just in 2022, it had $18 billion worth of revenue from having Safari use Google search as its default search engine.
Now, shares of Alphabet right now down about 0.5%. Several major health insurers are backing away from an elder care service. Bloomberg's Gina Cervetti has that story.
Humana, Aetna, and other major U.S. health insurers are declining to renew contracts with the elder care startup Papa for the upcoming year. This after a Bloomberg Businessweek report detailed extensive allegations of abuse from seniors who rely on the service and its workers. A spokeswoman for Papa declined to comment on specific contracts, but said the company has gained new clients since May and said 1/3 of Papa's clients have expanded services.
Now, shares of Humana right now, they're up about 0.5%. Aetna shares down just a fraction. And eBay has now become the place to sell luxury handbags. Its consignment service launched today, and experts will handle all photography, pricing, and listing of new and pre-owned items for users. Shares of eBay right now, they are up about 0.5%. I'm Lisa Mateo, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long at Bloomberg. We've got the Dow higher, the S&P, NASDAQ. They are both in the red. Stocks are retreating. The dollar is rebounding as investors gear up for that key inflation report tomorrow morning, 8:30 a.m. Wall Street time. That is expected to bring more insights on the outlook for the Fed's next steps. Tech leading losses in the S&P 500 index. Oracle down 12.5% after a slowdown in cloud sales, and 38 minutes to go until we get the unveiling of Apple's updated versions of its iPhone, smartwatch, and AirPods. Right now, we do have Apple shares trading lower by 1.4%. S&P down 11. That is a decline right now of about 0.3%. The Dow up 92, up 0.3%. NASDAQ higher now, lower I should say, by 80 points. NASDAQ down 0.6%. 10-year yield 4.27% with a 2-year 4.99%. Spot gold down $8 the ounce to $19.14, down 0.5%. West Texas Intermediate crude oil 89.11 a barrel, up now by 2.1%. So again, recapping, stocks are trading mixed with the S&P lower now by 10 points, down 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Matt Miller and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're also on YouTube, so go check us out there and search Bloomberg Radio. I don't know about you, Matt, but I have an iPhone 11. I'm very happy with my iPhone 11, but Apple today is going to roll out iPhone 15. So that kind of feels like I need to upgrade.
I can't believe your battery still works. Does it last the entire day?
No.
That's what
Please.
I figured. Yeah.
But I have a personal iPhone consultant. Did you know that?
Is it Anurag Rana?
It's Anurag Rana. He is also a tech analyst, I understand, for Bloomberg Intelligence. Anurag, so we're going to go to Cupertino today. Apple's going to, unveil some new products and stuff like that. Of course, it's all about the iPhone. What do you think with this iPhone 15 here?
Yeah, as you said, the two most important reasons why people upgrade, the number one is battery and the other is camera. And I think that's where we're going to see a really big enhancement in the higher version or the pro version of the iPhone 15 that comes out today. It's going to have a phenomenal camera, the Pro Max with 6x optical zoom, and I think that's going to drive a lot of people like myself to upgrade from the lower version of the phone to the higher version. And I think that's really going to be the biggest growth driver for Apple over the next 12 months. It's not going to be the more number of units that we sell, because that's where we are reaching a pitch of saturation and slow down over there.
So beyond the camera and the battery life, and by the way, the battery life, no matter what they do to improve it, it's always like 1 day, basically. Because you don't even get 1 day. No, but obviously, because they set the batteries to last only 2 years, and you've had this for 4. Isn't that, Anurag, something that have they at least settled a case like that?
Yeah, I don't remember it, but it is, see, what happens is, let's say with Paul's phone, he's been, watching movies on it, and it's going to run out because it's a very old battery. So he's not going to be able to use it. But, you get a new phone, a few years, 2-3 years, you shouldn't have a problem with it.
The most important thing for you, I know because I heard you say this yesterday, is pricing. So what do you expect from Apple in terms of pricing on these new phones?
So only the higher end of the phones, or the best of the best, the Pro Max model, I think that starts at $1,099. If it goes by $100, that's about a 9% increase. That really will make my day, at least, because what that's going to do is tell me that Apple doesn't need to sell the same number of even units like last year in order to grow their revenue on iPhone sales. Because that really is the biggest growth driver for the company. It makes up 52% of Apple's growth. So if we get to a phase that there is no price increase, that's not going to be good for Apple. But the rumor is that they are going to raise the rates over there, or the pricing.
Hey, I see Apple, and I guess they extended the contract with Qualcomm for, I guess, the chips or something like that. I thought Apple was going to make their own chips. What's happening here with Qualcomm?
So it's the modem, basically, the one that connects your phone, the Wi-Fi and the connectivity. Apple's been trying to do a lot more of insourcing for these parts, and honestly, I don't think they do it for money because there's no shortage of that at that point. They really figured out a way to get new and enhanced features that the third-party provider can't give them. In this case, it basically is clear Qualcomm has a better product right now, and they're going to stick with it. In the case of, I would say the normal Macs, they left the Intel chip, they came up with their own chips, they designed it and they got it made. It's actually done really well for their Mac product line. Their M1, M2 chips are pretty phenomenal, and every expert that I've talked to thinks it's far superior than what they were getting from Intel. So I think it's more technology and innovation and not so much pricing.
When are we going to see does it matter to you if we don't see anything new besides, the Macs, the iPhone, the watch? Does it matter to you if they don't come out with any cool innovation?
No. In fact, I don't even care about the watch as much. I mean, this is not that's going to drive the needle for me. For me, the number one thing is the iPhone, and the second most important thing is the AirPods. The reason why AirPods is important is because it has a very high attach rate to the phone. You may or may not get a watch, but you're very likely to get an AirPod with the phone. So if you think about it, mathematically, roughly you sell about 220 million phones a year, irrespective of what the climate is. You're only selling roughly around 100 million of AirPods. The attach rate for that, as it goes higher, we think it's going to be around 60-65%. One day, you're going to sell a lot more of the AirPods. That combined entity, I think, dictates a lot of Apple's future rather than, the watch or accessories or even the car when they come up with it.
So for a long time, and I think still today, one of the investment calls or theses behind owning Apple is the services business. How is that business?
It's a very, very clean and growing business. If the products business grows around 5 or 6%, the services business grows around 8 to 10. It's a very high margin business. The gross margins of that business is 70% compared to products, which is in the 30s. This is really one area that can drive stability to the Apple ecosystem, as well as drive up margins over time. And right now, I think Apple is actually going to make a bigger dent, in our view, in advertising, which has even a higher margin structure than the 70% I'm talking about.
Apple may be the only tech company I can think of, or actually, I take that back. Maybe the only company, period, that I can think of that doesn't say AI is the future of their growth. Are we going to go through their presentation today and then not address AI?
See, there are going to be enhancements to the normal features. They did an iOS upgrade. So, for example, if you were to make a phone call to Matt and Matt doesn't want to pick it up, you can see the live transcription of the voicemail that you're saying. You see Siri getting better over time. Those are product enhancements that's part of their portfolio. They're not going to come up with a product that's going to be independent and gain market share either in search or anywhere else. Apple doesn't talk a lot about these, either metaverse or these things, just because, for them, it's the total experience of the product. They really are not into, throwing out names just for the hype, for the sake of it.
But they have access to so much data. I mean, they could do a lot with AI, right?
But they're doing it. The questions you ask Siri is part of that whole algorithm. It's not in isolation. I mean, that smart intelligence over there is part of a large language model.
But Anurag, look, Siri is no good. Siri isn't any better. I still try and use Siri all the time to look up facts or to figure out strategies, to play music. She just doesn't do as well as she should.
Maybe in 2 years we will see that change. Apple doesn't like to market these things, but I'm very certain that over the next 2 to 3 years, you will see an improvement because ChatGPT, I think, has put a fire under all technology companies to improve their overall large language model and search capabilities.
All right, I got to go with my go-to Apple question. What are they going to do with their balance sheet? Are they just going to buy back stock just ad nauseam, just till the end of time?
Yeah, I mean, that's in the last 10 days, it's a bit cheaper. So I'm hoping this quarter they buy a little bit more. I mean, they have $100 billion of free cash coming here. There's not a whole lot they can do about it other than buying back shares, frankly, only because they can't buy anything big. They're not allowed to. I mean, there's a company that size is not going to be able to make any acquisitions. And dividends, I'm personally not a big favor of it. That's why I think buybacks is fine.
See, I'm in the dividend crowd. I think you throw a 3% dividend out there. Oh my gosh, how many retailers come flocking into this stock?
I don't know honestly why they don't. Because
the reason they don't is people like Anurag. Because people like Anurag, those tech snobs, you would say, oh, they're not a tech company anymore because they pay a dividend or like a utility. Oh, right?
See, 15 years ago, IBM was very confident that they can hold up with a large dividend. What is the dividend right now? At 5.5%, 6%, I don't remember off the top of my head. The yield is huge for IBM, and the stock's trading probably half the valuation of Apple in terms of price to earnings ratio. So, once you commit to a dividend, you just can't roll back. It's just you don't have any flexibility with it, and I think that's a bad space for any technology company to be in.
He's not wrong.
See,
he's not wrong.
That's how they think out there. Anurag Rana, tech analyst. And iPhone consultant to me for Bloomberg Intelligence. We appreciate that. As always, again, he's right. You look at IBM, it's got a dividend yield of 4.5%. That grow at about 1.5% per year. But when you think about IBM, you don't think about Apple as well. So the whole different ballgame there. All right, right now, let's head down and get world and national news. And let's think about where we're going to do that today. Nancy Lyons down in D.C.
Thanks, Paul. House Speaker Kevin McCarthy is calling for an impeachment inquiry into President Biden. He says it's the next logical step in their investigation into the president and his son Hunter's business dealings.
House Republicans have uncovered serious and credible allegations into President Biden's conduct. Taken together, these allegations paint a picture of a culture of corruption.
McCarthy is launching the impeachment probe without taking a House vote, which is a reversal of his previous statements. Conservative members pushing for the inquiry may have moved to oust McCarthy as Speaker if they were denied. It's also unclear whether McCarthy would have the 218 votes needed to impeach Biden, and some Senate Republicans are on record saying they do not think there's enough evidence to proceed. A major humanitarian disaster is unfolding in eastern Libya, where flooding from a rainstorm has left about 2,300 people dead, most in one city alone, Derna. Bloomberg's Tariq El Tablawi is following this from our bureau in Cairo.
The video clips that are being posted online essentially looks like a city underwater. I mean, one of the officials in the town was saying that the water level has risen to about the 4th or 5th floor of some buildings, which is making rescue, if possible, all the more difficult.
Bloomberg's Tariq El Tablawi reports Libya's political situation can hamper the response as well. The country is split by rival governments in the east and west, and both have called for 3 days of mourning. It's a race against time in Morocco to save those trapped under the rubble by Friday's devastating 6.8 magnitude earthquake. Officials say as many as 2,900 people were killed, more than 2,500 injured in the quake that hit Morocco's high Atlas mountain range. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. Stocks continue to trade mixed. We do check markets all day long here at Bloomberg. The Dow higher, the S&P, NASDAQ, they are both in the red. Stocks are retreating as investors await a key inflation report that is expected to bring more insights on the outlook for the Federal Reserve's next steps. And we are just 19 minutes away now from the latest Apple product release. Apple shares ahead of that announcement are trading lower today. We have got the S&P lower by 12 points now, a decline of 0.3%. Dow Jones Industrial Average up 77. That is a gain of 0.2%. While NASDAQ, the composite index, is down 87 points, a drop there of 0.6%. 10-year yield at 4.28% with the 2-year 5.00%. Spot gold down 0.5%, 19.12 the ounce, and West Texas Intermediate crude up 2%, 89.08 a barrel on WTI. Well, we do get the consumer price report tomorrow morning, and Thursday a reading on retail sales. So what about the economic outlook, specifically the strength of the consumer? Chris Marangi is co-chief investment officer at Cabelli Funds, and he was a guest this morning on Bloomberg Surveillance.
We can thank the consumer for forestalling that recession and increasing the chances of, I guess, what some are calling a soft landing. And the question now is, how long can that continue in the face of those higher gas prices, the resumption of the student loan payments, strikes in a whole bunch of industries, and then, the animal spirits, the marginal propensity to consume. Have we all exhausted our COVID revenge spending? I would say no personally, but that is a question.
And you can hear more of the conversation with Chris Marangi on the Surveillance podcast. You can download it wherever you get your podcasts. Amazon's offering a new service that will let its 2 million merchant partners deliver inventory directly to physical retail stores and warehouses. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Matt Miller and Paul Sweeney live here in the Bloomberg Interactive Broker Studio. Looking, as Charlie was mentioning, lots of eco data coming up throughout the remainder of the week, and that'll certainly be key for investors who are trying to gauge kind of where the Fed wants to go from here. It seems to be higher for longer, but or high for longer, maybe not higher. So we'll have to see how that plays out, and we'll be all over that. Adam Coons joins us. He's a portfolio manager with Winthrop Capital Management. Adam, thanks so much for joining us here. I'd love to get your just step back, and what is your call on putting money to work these days? How are you guys thinking about these markets with the different opportunities out there?
Yeah, so to start with, you got to look at the timing of what the Fed is doing, and then how that generally leads to a recession, and then ultimately what markets do. So I think we do believe that the Fed is done hiking interest rates.
Okay.
The problem is how you invest a portfolio is going to take a lot more time to unfold this idea of a recession and some sort of downturn. So what we're struggling with is how to stay invested. And so what we're doing here is we're not reducing equity per se. We're staying fully invested. But what we are doing is beginning to move more and more defensive. And that really comes down to this lack of the crystal ball around timing. So we do know that historically this time period can last anywhere from 12 to 24 months where the Fed stops hiking, and then there's a period of time where that kind of higher rate resides in markets before anything really bad happens to the economy or markets. So what we're doing is we're moving more defensive.
So talk to us about your economic call here. People have been talking about a recession for 18 months. I took it off the table, on my table at least, 3 or 4 months ago. Is that still on the table for you?
It is, and I think we're really going to see the signs of a recession in the first quarter of 24. What we're looking at is the consumer. That's our focal point, and how the consumer kind of ends this year, and that really comes down to the holiday shopping season, right? So what we're seeing is a consumer that has been able to thrive even through this inflationary period, because while wages have not kept up, they are increasing, and there was enough excess savings to help push the consumer through this period. But if you map out, you'll see that excess savings actually begins to go away in 2024. So what we're seeing is, credit card usage is at all-time highs. We're seeing a pullback in the actual extension of credit to consumers. And we are starting to see wages decelerate. So if all those things start to hit at the same time, and then you could throw into the bag, student loan debt, when that starts to pick back up. So you've just got a lot of things happening all at once, and we think that's just going to stress the consumer in this holiday shopping season. And so then in the first quarter of 24 is when we're going to start to see real signs that we're either now in a recession or at least moving quickly towards that direction.
All right, so with that backdrop, you mentioned earlier that getting defensive. What does defensive mean for you guys?
Yeah, that is a hard one. It's in the eye of the beholder. But for us, what that means is we're looking for higher quality companies, low debt. So that can still be technology companies. It doesn't necessarily mean move all to value. We still like some of the large cap tech companies like Microsoft, Alphabet, even Apple to a degree. So those still play a role. But what we're really doing is we're looking for those low beta and some of those stocks that have lagged. We are liking equal weight strategies right now. So an equal weight S&P 500, for example. And what we're trying to do there is reducing that risk to some of the higher beta names like Tesla or NVIDIA that we think are quite overvalued right now. And so we're trying to reduce the exposure to those high concentration names in the top 10 of the S&P 500. At the same time, we're overweighting some of those stocks that have lagged so far this year. So that's really our primary way of playing defense, our equal weight strategies, and then minimum vol strategies.
How about on the fixed income side? I mean, I look at a 2-year note here. I can get 5% on a 2-year treasury. That's not so bad. Maybe should I park some money there? How do you guys think about it?
Yeah, first off, you definitely don't want to be sitting in cash right now. That is bleeding returns at 0% when you've got the opportunity of short-term bonds above 5%. So we are invested on the short end, but like I said, we do see this as kind of the peak of the rate hiking cycle. We do see it as the peak in long-term interest rates as well. So right now, it may take a while for that to play out where you see interest rates roll over. But for us, we're kids in the candy store with the idea that we can just sit and carry a high interest rate in long-term bonds. So we are incrementally extending duration. And in some ways, that is a way to play defense as well. So yes, our highest conviction call across portfolios is extending duration in high-quality bonds.
So are you guys, I guess with your economic outlook, probably not even looking at the high-yield space at this point?
No, we are actually reducing exposure to that. And that's two parts. One is, as you just said, the economic outlook. But secondly, if you look at spreads just generically, we just don't think you're compensated. The convergence of double B type high yield bonds towards triple B or even some A-rated, it's just gotten very, very narrow. And we just don't see a reason to take that excess risk. You really don't start to pick up a lot of spread until you move well down to your really low single B, maybe even triple C type securities in the high yield space. So for us, we definitely don't want to step into that right now. And yes, we're moving higher quality.
Do you guys have any allocation to alternate investments?
We do, and we do like multi-strategy right now. We think some of the macro strategies are going to have a difficult time. So for us in the alternative space, we're focused on multi-strat type strategies. We are somewhat pessimistic on private equity. So while we do have an investment there, we are not moving large sums, and we're definitely not allocating excess to private equity in this current time. So for us, mark to market is a big issue still that hasn't flowed through private equity. That's still an issue in real estate. So like I said, we're pretty specific to that multi-strat type hedge fund space within alternatives.
Hey, Adam, thanks so much for joining us. Always appreciate catching up with you. Adam Coons, he's a portfolio manager at Winthrop Capital Management. Again, a little bit cautious out there, which is understandable, given all the crosswinds that are out there for investors. I am looking at crude oil again, because we started calling that out early this morning. Continues to move higher. Let's just look at Brent. Crude 1.75% increase today, $92.20 23 cents per barrel there on the WTI stuff coming out of West Texas. Again, up 2.1%, $89.12. So will we see that, or to what extent will we see that at the pump going forward? Will have to be seen. We'll keep an eye on energy. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
You got it, Paul. The National Labor Relations Board is accusing Amazon of violating workers' rights. Now, that charge stems from a confidentiality agreement an employee had to sign in order to work for the company's drone program. That agreement prohibited the sharing of business and financial information, among other things. The case could force Amazon to change its rules. Shares of Amazon right now down about 0.7%. UPS has revealed more details about its union labor deal. Bloomberg's Steve Potisk has the breakdown.
Wages will jump about 10% in the first year of the 5-year deal, which took effect August 1st. Wage gains will be smaller in the subsequent years, averaging 3.3% per year over the life of the contract. When adjustments to pension, health benefits, and other expenses are included, UPS says it will absorb 46% of the deal's total cost in the first year. The company retains the ability to use new technology to boost efficiency.
Now, the company also says it now has to win back the customers that it lost during those contract talks. Right now, shares of UPS are down more than 2%. And two of the world's most popular combat sports have become one. Endeavor Group Holdings has completed its takeover of World Wrestling Entertainment, creating a new publicly trading entity called TKO Group Holdings. Now, Endeavor, which operates Ultimate Fighting Championship, a talent agency, live events, and a sports betting business, they're going to own 51% of TKO, while WWE investors will own the rest. And the company says the merger will result in some layoffs and expects $50 to $100 million in cost savings. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller and Paul Sweeney live here in the Bloomberg Interactive Brokers studio. S&P 500 off 1/4%. The Dow's up 1/4%, so go figure. NASDAQ off 0.6%. Yields kind of hanging in there. 10-year Treasury 4.28, but we got 2% on the 2-year. So how about that? I can go sit there and get 5% for a couple of years. Crude oil up 2% on WTI crude, $89 a barrel. So we'll keep an eye on that. There's been a big move higher over the last several weeks. Right now, let's head down to Washington, D.C. We'll get rolled in national news with Nancy Lyons.
Thanks, Paul. House Speaker Kevin McCarthy says a formal impeachment inquiry of President Biden is warranted after House Republicans have uncovered new questions about his business dealings with his son, Hunter Biden.
These are allegations of abuse of power, obstruction, and corruption, and they warrant further investigation by the House of Representatives. That's why today I am directing our House committee to open a formal impeachment inquiry into President Joe Biden.
Speaker McCarthy says he's actually directing the House Oversight and Judiciary Committees to open the inquiry. It's unclear whether Republicans have the votes to bring articles of impeachment against the president. Earlier today, a spokesman for the White House counsel asked on social media, why is an impeachment inquiry the next step when the House GOP investigations have turned up no evidence of wrongdoing by President Biden? Hurricane Lee is churning in the Atlantic on a northwesterly path. It's about 500 miles south of Bermuda. National Hurricane Center specialist John Cangelosi says this storm poses a threat to the eastern U.S. even if it doesn't make landfall.
Rip currents are going to happen regardless of the exact track. In fact, they're already happening. And they're really up and down the east coast of the United States, literally everywhere, from central Florida through northeastern Maine.
Cangelosi says the storm is now packing winds of 115 miles an hour. The nearly 2-week search continues for Danilo Cavalcante in Pennsylvania, with authorities there saying the escaped convict was spotted in a homeowner's garage last night. He managed to escape, and Lieutenant Colonel George Bevins with state police says he did make off with a weapon.
Cavalcante is considered armed and extremely dangerous. He is now armed with a .22 caliber rifle with a scope and flashlight mounted on it.
Bevins is warning residents in Chester County to lock their doors and windows. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Paul.
All right, Nancy, thank you so much. We appreciate it. Interesting story here on Ford Motor Company. Ford Motor Company elevated 2 members of the founding family in an executive shuffle aimed at improving marketing and relations with its dealers as the automaker shifts to building electric vehicles. Elena Ford, cousin of Executive Chair Bill Ford, was promoted to the newly created position of Chief Dealer Engagement Officer effective Tuesday from her previous position of Chief Customer Experience Officer, according to a company statement. In her new role, Elena Ford will work with 10,000 dealers worldwide on retail facilities, training, diversity, and community engagement. William Clay Ford III, son of the executive chair, will join the company later this month as general manager of its performance division that develops and markets souped-up models. The Ford family still controls the 120-year-old automaker through a special class of stock, and 3 of its members sit on the company's board of directors. In an interview, Elena Ford said the founding family's enduring involvement is, quote, great for the company and something employees and dealers are really excited about. Most of these dealers are family-run businesses, so they feel very connected to us, Ford said. It's important to keep this legacy and this passion for the business. Looking at the stock of Ford Motor Company right now, it is, where are we trading the stock here today? Come on, symbol. There, it's up 1.1%, $12.36 for Ford Motor Company year to date. The stock is up about 12%. It's got a market cap of just under $50 billion for Ford. Looking at these markets here as we close out the hour, S&P off about 0.3%, the NASDAQ up about 0.611%. And again, WTI crude oil up over 2%, $89 a barrel. Right now, Sound On with Joe Matthew from the nation's capital, Washington, D.C. That starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
The Biden administration says we're making good on a long-held promise. Ballooning budget deficits in Washington. We're in a bizarro political world here.
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Most people, including most Republicans in Congress, understand that we need to get aid to Ukraine.
Who's going to take us in a rational way into the future and lead our country?
This has really become kind of a new frontier in American politics, is this battle between red states and blue cities.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
The impeachment inquiry is on. Welcome to the fastest show in politics, as Speaker Kevin McCarthy returns from his summer recess with a bombshell announcement, directing his committees to launch an impeachment inquiry into President Joe Biden because of what he calls a culture of corruption involving his son Hunter and the rest of the family, apparently. We're going to talk about this, the political implications, and what it might mean for a possible government shutdown with Bloomberg Government's Congress reporter Zach Cohen, and insights from Terry Haynes, the founder of Pangea Policy. Analysis this hour from our political panel. Rick Davis is here, Bloomberg Politics contributor, Republican strategist, alongside Alvin Jordan, vice president at Rock Solutions. We'll also turn to Apple's big day later on, how it's playing in China, where the iPhone is, of course, now banned by state-owned agencies. Much more to follow after a look at Wall Street. Let's get up to date on trading. First, here's Charlie Pellett.
Thank you very much, Joe Matthew. Indeed, mixed market right now, as it has been for the past couple of hours. The Dow higher, S&P, NASDAQ, they are both lower. The Apple iPhone, Watch, and AirPods launch event kicking off right now. We do have Apple shares trading lower now, down by 1.4%. I will update you throughout the program on any news coming out of Cupertino. But again, Apple shares right now, the product launch underway. Apple down now by about 1.4%. The Dow, the S&P, NASDAQ trading mixed. The dollar rebounding as investors gear up for a key inflation report tomorrow morning that is expected to bring more insights on the outlook for the Fed's next steps. S&P right now down 11, drop there of 0.2%. The Dow up 93, a mixed market up by about 0.3%. The NASDAQ Composite Index down 85 now, a drop of 0.6%. 10-year yield 4.28%, with a 2-year that's yielding 5.00%. Spot gold down $9.50 the ounce to $19.12, a drop there of 0.5%. And West Texas Intermediate crude up 2.2%, 89.08 a barrel. Brent, by the way, 92.17. Brent, of course, the global benchmark, it is pushing higher by 1.7%. Well, tomorrow morning's consumer price report comes amid a backdrop of a rise in energy prices. Lindsay Piegza is chief economist at Stifel Nicholas.
I think energy costs are one of the big wild cards that the Fed is facing right now. Now, of course, last month we did see headline inflation tick higher. The committee seems to be brushing that off. But if, in fact, we do see these elevated energy costs sustained on a sustained basis, filter down, this could cause a significant reversal in headline inflation, forcing the Fed to take more aggressive action that I think investors are bracing for.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Lyft is launching a feature that will try to prioritize matches between women and non-binary riders and drivers in response to demand for increased safety protections for its users. Again, recapping, stocks trading mixed. S&P down 9, drop there of 0.2%. The Apple event underway in Cupertino. Apple down now by 1.2%. And that's a Bloomberg Business Flash.
All right, Charlie Pellett, thank you, and welcome to the Tuesday edition of Bloomberg Sound On. I'm Joe Matthew in Washington, where there are ripples in the water. What a way to make an entrance. Kevin McCarthy, gone the better part of 7 weeks on August recess. Back today, calls reporters together at 11 o'clock in the morning. No questions, just one announcement.
Today, I am directing our House committee to open a formal impeachment inquiry into President Joe Biden. This logical next step will give our committees the full power to gather all the facts and answers for the American public. That's exactly what we want to know, the answers.
So we're really doing this. And of course, it comes against the backdrop of a very difficult debate over government funding. Everyone we talk to on this broadcast, lawmaker or otherwise, is hopeful they might avoid a government shutdown, but acknowledges the truth that everyone seems to be speaking here, that it appears inevitable at the moment. So the question is, did this just make it easier or more difficult? Because there were some lawmakers like Marjorie Taylor Greene who wanted an impeachment inquiry tied to government funding. You do this, we'll do that. And now it appears to be on. Bloomberg Government's Zach Cohen is covering this from Capitol Hill and joins us from Congress right now. Zach, it's great to see you. What's your thought on this? What finally motivated Speaker McCarthy to go here?
Well, I think notably what he said, what he didn't announce today is that they'll be voting on an impeachment inquiry. Instead, he just sort of directed House Oversight Committee Chairman James Comer, along with Judiciary Chairman Jim Jordan, to launch a formal impeachment inquiry. Now, both of those committees, especially Comer's, have been looking into any potential involvement by President Joe Biden in the business dealings of Hunter Biden while Joe Biden was then vice president. And so this is an escalation in those investigations. There won't be a vote on it, however, to formally start an impeachment inquiry. And that, I think, is meant to prevent potentially a failed vote on the House floor. It would have been very difficult for some of the House Republicans in Kevin McCarthy's conference to vote to begin an impeachment inquiry or to escalate one while they're running for re-election in 2024. And so he's threading a very fine needle here between appeasing those in his conference who are really eager to go after President Biden on these allegations of corruption, which have not been substantiated, against those who would rather slow roll and focus on the policy agenda of the House Republican Conference.
Just to be clear, though, he was among those criticizing Nancy Pelosi for doing that very same thing to Donald Trump, right?
That's right. I was talking to Senate Republican Whip over on the other chamber, John Thune, earlier, and he said, look, we all spent a bunch of time talking about how Democrats had weaponized the impeachment process in impeaching former President Donald Trump, not once but twice. First for his apparent withholding of aid to Ukraine in an investigation of the same Biden business dealings that Hunter Biden was involved in, and then for the apparent effort to overturn the 2020 election. And he says, look, we shouldn't be in the process of just impeaching the next guy when, the political power in the White House flips. And so a number of Republicans will have to square that circle if it does get that far.
A lot of Republicans have also been asking for evidence. Where is the direct line to Joe Biden? We hear a lot about the Biden family. Some call it the Biden crime family, depending on who you're talking to in the Capitol. But even the speaker today spoke largely about the president's son and his quote-unquote family as he outlined not the charges, but some of what they have found in their investigations at the committee level. Here's part of what he said.
We know that bank records show that nearly $20 million in payments were directed to the Biden family members and associates through various shell companies. The Treasury Department alone has more than 150 transactions involving the Biden family and other business associates that were flagged as suspicious activity by U.S. banks.
Is there anything new here, Zach? Is there anything that specifically points to Joe Biden?
The short answer is no, and that's the loud message coming out of the White House and the president's allies, both on Capitol Hill and off, that there is no direct evidence of President Joe Biden being involved in Hunter Biden's business, which we should, allow. Included working with foreign actors who had business before the U.S. government. That really is the concern, at least on the Republican side of the aisle. But if Republicans aren't able to surmount this hurdle that directly links President Biden with the business of Hunter Biden, especially when it comes to international business partners, that's going to make it really hard to get even some key Republicans in both the House and the Senate to agree to impeach. And if it does lead to an impeachment and eventually a conviction vote in the Senate.
With us from Capitol Hill, Zach Cohen. Many thanks to you, Zach, for being with us. Bloomberg Government Congress reporter, as we add the voice of Terry Haynes. I've been looking forward to talking with Terry. I didn't think it would be on a day like this. The founder of Pangea Policy. It's good to see you, Terry. Welcome back to reality in our post-Labor Day world. It just got a lot more bizarre And in a recent note to clients, you point out that a government shutdown is 60% likely. I wonder, with what happens today, does it become less likely because, say, members of the Freedom Caucus who wanted to see this impeachment proceed might be more likely to go along with Speaker McCarthy here on a continuing resolution or even, God forbid, an actual budget? Or did we just seal our fate and guarantee a shutdown because Democrats will protest?
Well, Joe, two things. First, I'm with you on the idea that McCarthy supporting an impeachment inquiry smooths the waters a little bit on a spending deal for this fiscal year. But I think what you've got also is you've got a very closely divided Congress with a lot of people on both sides who want to be very performative about the things that they care about, whether it's Ukraine funding or no Ukraine funding, whether it's beefed up border security or not, whether it's a host of other things that the various parties' bases care about. So I think you're probably going to get a lot of stop-start. But what I would look for is this. My experience over the past few years has always been that spending keeps getting kicked down the road until you have the defense authorization, which won't get finalized until November, December. Then you can set levels for defense spending. Once that happens, then everything else kind of falls into place. I would expect the same timeline here. So for markets, I think what you get is you get a lot of uncertainty about the funding levels of the government in different places that have some volatile effects in the markets. But what you end up with is a deal around December, not coincidentally right before the 1% cutbacks kick in this coming January.
With that said, could we see a defense spending bill move through the House the next 2 weeks like the Speaker was hoping for, or did this just bog things down?
No, I think you get that bill. What I'm thinking about is the House-Senate conference, both on authorization, which, the people younger than you and me don't remember what authorizations are anymore, but the substance committees are supposed to make decisions on priorities within a spending area, and that's what defense authorization is, and then you get to the spending. So I think that probably takes every bit of the next 2 or 3 months, judging by the length of the summer vacation and kind of where we are in the schedule.
Next thing you're going to say is regular order, and then we're going to really be set to party here, Terry. But with regard to the NDAA, which we hear about constantly as this is the one nonpartisan must-pass, never runs into trouble. It's been running into a bit of trouble with this blockade against military promotions that Senator Tommy Tuberville is putting forth all by himself in the Senate. He does not appear to be backing down. In fact, he spoke on the Senate floor about this late yesterday, even suggested that some of the officers nominated for promotions might not be worthy because they support DEI policies. How does that play in the overall debate over defense spending authorization? Will they collide at some point?
Well, it's a little bit of a spice that makes things, I think they will collide. It's a little bit of a spice that makes things harder to resolve, but I would look for Senator Tuberville's issues to get resolved by year's end in the timeline that I suggest. All you have to do to figure out Senator Tuberville's motivations really are, number one, the Alabama Republican Party supports him very strongly and very formally. Secondly, you've not really heard any serious pushback from other Republicans in the Senate. I'll actually add a third, which is, Tuberville claims that the Defense Department has never really engaged him seriously on the issue. And I keep listening, and I keep not hearing the Defense Department knock that down strongly. So, it seems like on a process point, which is a lot of what the Senate always cares about, kind of deference and process. He may have a point in process, which means it's going to take that long in order to resolve this thing in the annual spending bill.
You can envision a world in which we see a continuing resolution or a stopgap that gets us past the 1st of October. They buy some time. Can you envision a world in which we go straight through the new year without a shutdown, or are you among those who think it's inevitable?
Well, I never think anything's inevitable first, but I will say this: I've been I started talking about a substantial likelihood of a shutdown the day after the budget deal was deal was passed, because it was obvious that spending fights weren't going to get resolved there. So and pretty quickly thereafter came out with a 60% shutdown. I think we get shutdowns at some point. Yeah, I think they are likely to be. Right now, I think they're likely to be short in duration. You'll get a few of them stop-start over the next few months, but before you get a final resolution. But I think the effect of what we saw today with McCarthy and the impeachment inquiry is a desire by his troublesome 20 or so members to give him a little bit more rope on the spending and on the other substantive issues. And I think that's important. It does smooth the waters a little bit.
Did he buy himself some rope to keep his job? We've heard motion to vacate more often last week than we have in a couple of months here. Does this keep the gavel in Kevin McCarthy's hands?
Oh, yeah. I'm not one of those who think that McCarthy's forever on tenterhooks. And the reason I say that is because those who bring up the motion to vacate, their power is at its zenith whenever they're threatening. The moment that they try to bring that into being, they lose power, and I think you saw a rough analog of that in January, which ended with McCarthy being there. They want things, and the problem with those folks is that they don't know what they want in any coherent sense. There's 20 different views about what the best idea might be, but apparently what McCarthy thinks is that he can get more cooperation out of them by rhetorically ramping up the current inquiries into the Bidens by using the word impeachment. And so he'll do it. And from his perspective, he doesn't see that as a Rubicon of any kind. So
I'll tell you what, he's still got an issue with Matt Gaetz, apparently. As we just cleared a story on the terminal, McCarthy must change course or face removal effort, Gaetz says. Says the speaker's not delivered on promises regarding spending and subpoenas and is not putting the party in a position to succeed. I guess it's a good thing for Kevin McCarthy. There's only one Matt Gaetz.
There's, they say in the Navy, there's always somebody who doesn't get the word. So actually, it's a little saltier than that. But
I believe you. Hey, Terry, I missed you. It's great to have you back. Terry Haynes, a friend of Bloomberg and this program, Sound On. Please don't be a stranger, and appreciate the insights here in the clutch. We didn't think we'd be walking into this today. People were talking about Speaker McCarthy going to a Wednesday caucus meeting in which he might deliver this message. Not so. Before cameras and microphones at the podium in front of the Speaker's office this morning at 11 a.m., the impeachment inquiry is on, and there will not be a vote. We'll see what they find. Of course, as we follow the beat here, always from Washington, on the fastest show in politics. We'll assemble our panel next for their take. Rick Davis is coming in along with Alvin Jordan, back from Rock Solutions. That's next on Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. The Apple event, the launch event underway right now in Cupertino. Apple announcing a new Apple Watch with improved performance. Also, Apple says it will phase out leather from its iPhone cases. We'll continue to update as we get headlines out of Cupertino. Apple shares, they do remain lower. They were lower heading into the event. Right now, they are down by 1%. It is a mixed day on Wall Street. We're going to call it little change right now on the S&P, down by 0.1%, lower by about 5 points. The Dow holding on to a 137-point gain, up by about 0.4%. NASDAQ, the composite index, down 64 points, a drop there of 0.5%. Certainly weighing on markets today, shares of Oracle after earnings. The stock is now plunging by 13.1%. Tech leading today's losses. We've got the 10-year yielding 4.28%, with a 2-year 5.00%. Spot gold down $9 the ounce to $19.12. Bitcoin up 3.5% right now at 25,988 on Bitcoin. And crude oil is advancing. West Texas Intermediate crude up 2.3%, 89.26 a barrel. So again, with the Apple event underway, Apple shares trading lower now by 1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
It was just one day ago, yesterday, that Mick Mulvaney said on this program, the co-founder of the Freedom Caucus, who of course went on to be Donald Trump's chief of staff, said on this program that Speaker McCarthy may be in more danger of losing his job now than he has been yet.
I think Kevin's probably at his highest level of risk here right now, but that's the right place to have it because, again, a shutdown is not that big a deal, and I think Kevin might have to go through at least a little bit of a shutdown if for no other reason to establish some bona fides with the conservative wing of the party.
And that, of course, is when everybody was talking about a shutdown. That was Monday. Fast forward 24 hours, Speaker McCarthy, for the first time in 7 weeks, at the podium in front of reporters.
Now, I would encourage the president and his team to fully cooperate with this investigation in the interests of transparency. We are committed to getting the answers for the American public. Nothing more, nothing less. We will go wherever the evidence takes us.
And we'll find out where the evidence takes us here, because so far it sounds like the allegations have everything to do with Hunter Biden, the so-called Biden family, but we are still waiting for a sense of how they connect the dots to Joe Biden beyond his being on the phone. Remember, Republican members of the Oversight Committee said that, yeah, he's on the speakerphone with some of Hunter Biden's people here, but there was no business transaction, not even a business conversation. So we want to follow the beat, and we assemble our panel. Rick Davis, I'm glad to say, is here, Bloomberg Politics contributor and Republican strategist, joined today by Alvin Jordan, a Democratic analyst, vice president at Rock Solutions. Great to have you both here, gentlemen. Rick, your thoughts on this? Knowing that Speaker McCarthy criticized Nancy Pelosi for launching an impeachment inquiry into Donald Trump without a vote, what's the purpose of this today? What's the motivation?
Yeah, look, I mean, he's walking a tightrope of a number of really tough jams that he's got in the House. I mean, this impeachment inquiry announcement today is a way of letting some of the air out of the conservative side of his party, who's angry with him that he hasn't acted more harshly on the spending cuts that they want, even though it violates the deal he cut with Biden earlier in the year on spending. And on top of that, he's got the government shutdown because they haven't done the work that he claimed he was going to do as Speaker when he first got elected, that, through regular order, he would pass, all 12 appropriations bills. And I think last count, they had one done. So he's stuck in the middle of this. And then you pile on top of that Ukraine funding and the special supplemental for emergency disaster spending. And he can't count votes. He doesn't have enough people to really pass this agenda that is pressing and due by the end of the month. So this was his way of, I think, letting some air out of the tire. It violated his own rule, which is, as you pointed out, Joe, I'm going to take a vote on any impeachment proceedings, and he basically fell back on the Pelosi model, which had been highly criticized by him and other leadership, including the Freedom Caucus people. So, yeah, I agree with Mick Mulvaney, and your point with him yesterday is that he's walking a tightrope. And when you have people like Matt Gaetz, who just put out a statement right after the announcement by the speaker that it wasn't enough and he's got to do more on spending. I mean, his worst nightmare is his own party.
Matt Gaetz, of course, the thorn in Kevin McCarthy's side, the congressman from Florida, calls the move to open an impeachment probe into President Biden a baby step. Says the speaker has not delivered on promises regarding spending and subpoenas and is not putting the party in a position to succeed. So this is not making everybody happy. Alvin, the response from Democrats, I'm going to let John Fetterman do this. Of course, the senator, Democratic senator from Pennsylvania, who they hit him up in the hallway in the Capitol just moments after this was announced by the speaker. Just give this a listen.
Asking about this news that Speaker McCarthy has formally launched an impeachment or has said he's going to.
Oh my God, really? Oh my gosh, it's devastating. Ooh, don't do it. Please don't do it. Oh no, oh no.
We gotta run back to the office, but
He's pretending to cower. No, not an impeachment. Is there some truth to that? How do Democrats handle this? Do you just laugh it off?
I think that's exactly what you do in this case if you're the Democrats. There's no surprise here to anyone. I think maybe the timing of it is a bit unique in that way, but I think it's very clear that we're looking at a bit of a political calculus, if you will. I think this is totally about political strategy and less about actual conviction. It's very clear. You played, the Matt Gaetz clip. It's very clear that this is truly setting the stage for a bargaining chip. We've mentioned at length that funding and the government funding deadline is coming up at the end of the month, and so more than anything, I think that this is definitely a bargaining chip for any type of additional government funding, kind of political back and forth that will happen, and less of a serious, kind of push to unearth any new information.
So, okay, that said, Rick, did this make a government shutdown less likely? This is a weird world we're living in, but this idea has been suggested more than once. You make some members of the Freedom Caucus happy with impeachment, they'll let you get a continuing resolution.
Well, it certainly is in his interest, Speaker McCarthy's interest, not to have a government shutdown, right? He's got work to do. He wants to cut a deal to get a continuing resolution. He's already said that very clearly. The only question, I think, coming out of the Speaker's office is how long would that continuing resolution last in order for them to get the rest of the appropriations bills done and get into a conference with the Senate. The Senate's not giving him any lifeline, right? They're sitting back going, we've done our work. You need to get yours done. A lot of conservative Republicans are unhappy in the Senate with the lack of progress that they've made, even after all the promises they gave to their constituents that this would be a different kind of Republican organization in the House. So he doesn't want to see a government shutdown. It just makes it another vote that he has to contest in amongst all the rest of these that are causing him heartburn right now.
Meanwhile, in the Senate, the gentleman from Alabama changes his tune slightly on the blockade against military promotions. This is Coach Tommy Tuberville, of course, is protesting the abortion travel policy at the Pentagon. He's now blocking more than 300 military promotions. We're talking about this on an almost daily basis, and took to the floor of the Senate last night, late yesterday, to respond to his critics. A new wrinkle on why this blockade should last.
Senator Reid said it was disrespectful not to approve them by unanimous consent. I do not agree with that. Many of these nominees are worthy of confirmation. I will agree, and I will vote for them. But some are not.
Some are not, he says. Alvin, he's had time to look into some of these nominees and says they should not be confirmed because they support DEI policies. Where's this going?
I think it's going exactly the way of, the country's kind of tone in response to this, which is what are we really saying? What are we really talking about? Because it isn't bearing fruit. I think we've seen this with Governor DeSantis as he's kind of stepped away and at least softened publicly kind of his approach and attack to these types of things. And so I think that, Tuberville is one where he is definitely, no stranger to the antics. And so I think this is just kind of muddying the waters. I think earlier someone used the term performative, and that is essentially where I come back to when I think of, quite frankly, anything Tuberville related. But in this instance, I think it's more so trying to, shine a light and kind of give a performative kind of edge to himself, as opposed to driving anything of substance, to be honest.
Rick, is the senator here showing us anything, giving us a sign by picking through individual nominees now? Does this look like something that goes on forever, or he might be looking for an exit ramp at this point?
I don't know. I mean, you could make the argument, I guess, along that line, Joe, that he finds a couple of guys that he votes against because of their diversity and inclusion points of view, which is also policy at the Pentagon, in addition to the abortion policy that he has opposed. But it doesn't change the policy. And giving a couple of scalps to Coach Tuberville doesn't make sense if you're the Democratic leadership. I think they feel like they've got him right where they want him, and let him stew. It doesn't do much for our national security, but the politics are pretty clear that the only people that Coach Tuberville's been really getting on his side are the adamant anti-abortion groups that support his abortion stance. But going woke seems to me weakens his position, doesn't strengthen it.
Fascinating stuff here. I want to let everyone know that we're going to have Senator Tuberville join us for an interview on Balance of Power on Bloomberg TV at 5 p.m. Washington time to talk about this a little bit more. Let's stick with our panel coming up next. And right now, check world and national news. We get up to date with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. House Speaker Kevin McCarthy is launching an impeachment probe into President Biden for what he calls, quote, a culture of corruption. The California Republican is bypassing a House floor vote to move to an impeachment inquiry, with many saying he didn't have the 218 votes he needed.
This logical next step will give our committees the full power to gather all the facts and answers for the American public.
McCarthy says Republicans have been looking into whether Biden played a role in or benefited from Hunter Biden's overseas business affairs. The White House has said that President Biden was not involved in his son's business dealings and has done nothing wrong. The NFL season is over for New Jets quarterback Aaron Rodgers. Both the NFL Network and ESPN are reporting an MRI performed today confirms he did tear his Achilles tendon and will require season-ending surgery. It only took 4 snaps for him to go down in last night's game against the Buffalo Bills. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story. BP CEO Bernard Looney is going to resign. This, according to the FT. Headline right now on the Bloomberg Professional Service, ADRs of BP, they are advancing. Right now, BP is up by 2.6%. Other energy stocks also higher today. We've got ExxonMobil up by 2.8%. Chevron up now by 1.9%. EOG Resources up 2.7%. And shares of Pioneer Natural, they're up 1.5%. Bottom line here, a rally in energy today. West Texas Intermediate crude up 2.1%. Brent up 1.7%. But again, the headline right now on the Bloomberg, BP CEO Bernard Looney will resign. Apple officially announces the iPhone 15. That word coming moments ago. The new Apple Watch models will be going on sale today. And they will be available to consumers as of September 22nd. Number of headlines coming out of Cupertino right now with the big Apple event underway. Apple, by the way, also says it is phasing out leather from all new products. Stocks are trading mixed. A rally in banks and energy companies pushing stocks away from session lows. S&P right now down 5, a drop there of 0.1%. We've got the Dow up 152, a gain of 0.4%, while NASDAQ is lower by 66. For the NASDAQ Composite Index, a drop of 0.5%. 10-year yield 4.28% with a 2-year 5.00%. Spot gold down 0.5%. $19.12 the ounce. And as we mentioned, crude is pushing higher. WTI up now by about 2.1%. Small businesses took a dimmer view of the U.S. economic outlook in August. And with that story, here's Bloomberg's Vinny Del Giudice.
Blaming on weaker sales and inflation. The National Federation of Independent Business reports an estimated 27% of small firms raised prices last month, the first increase in 9 months. Small firms also cut their investment plans and reported fewer job openings. On the plus side, more reported their credit needs are being met, even after this year's bank failures led to tougher loan standards. Vinny Del Giudice, Bloomberg Radio.
Apple, as it rolls out new products, down 1.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
All right, so it's official. Big day in Cupertino. The iPhone 15 becomes reality. What the heck do I do with a 14 now? That's another conversation for a different day, I suppose. But I want to pull you back to about 1 week ago. It was the 7th of September. Because you see Apple stock is down today on this big celebration day, the big release of the iPhone. Talk of a super cycle. But maybe that's because what we learned last week. We talked about it when it happened with Dan Flatley. China seeks to broaden iPhone ban to state firms and agencies. Remember this? China expanding the ban on the use of iPhones in sensitive departments to government-backed agencies and state companies. And by the way, that's a lot. A sign of growing challenges for Apple in its biggest foreign market and global production base. So how does this all come together? Dan's back with us today. Bloomberg national security reporter Dan Flatley, great to see you again. Does the iPhone 15 work without China? I mean, how do you get critical mass? How do you get a super cycle without this important market?
Yeah, it's a good question, Joe. I mean, I think that we're seeing the beginning potentially of a lot of tension, obviously, between not just Apple, but Huawei and the new phone that they unveiled last week or the week before, much to the surprise of U.S. officials, particularly the Commerce Secretary Gina Raimondo, who's just wrapping up a trip there to sort of repair some of the ties. And so it's really kind of fascinating to watch this all play out because these are consumer devices that we all carry with us every day. Yeah. And yet they are the center of the Biden administration's foreign policy, at least as it pertains to China, which multiple officials have, of course, identified as the biggest geostrategic threat right now. Yeah. And so what does it mean for Apple? So I think part of the question is, how many of these new phones are they going to be making in India? How many of these new phones are they going to be making outside of China? How many of them are they going to be selling outside of China? And how many of them are they going to be selling inside China? Because we know that that was kind of what helped their bottom line the last time there was a
and analysts are guessing on all of those answers right now.
Right.
We don't really have a sense of what the impact will be, but you bring up a couple of very important points. Number one, there's an alternative. That Huawei phone was a game changer, I guess, in China. If you don't want an iPhone, you can get this thing, and apparently it could lead to sanctions against a chip maker. That said, is Apple a partner of China? You talked about warming up to India more, not only for sales but manufacturing. Are we turning away from China with Apple as the proxy for America?
You know, it's really interesting. This morning, the House Select Committee on Competition with China held a hearing in New York City where they, following some meetings with Wall Street executives, in fact, they were the chairman of the committee, Mike Gallagher, was talking about how the executives wanted to meet in secret because how sensitive this issue is. Yeah. And I think that, you know, what's happened is over time, it's not just that supply chains have shifted to China, but companies have focused on the Chinese domestic market as a place where there's going to be a lot of growth. So for Apple to all of a sudden say, and I'm not saying that they're saying this, but for them to say, hypothetically, that we're getting out of the Chinese market, I don't think that that's really going to work for their business model at this point, just as it doesn't really work for a lot of U.S. companies that are counting on the growth in the Chinese market over time. So I think that they're going to have to navigate this as best that they can, and it may mean shifting some of those supply lines out of China, maybe thinking about ways to shore up some of the demand in other places, but it's not something that's going to, you know, like turning a switch is going to change immediately.
It's a really interesting scenario here, Dan. I appreciate your coming back to talk to us about it. Dan Flatley, Bloomberg national security reporter. As we reassemble our panel, I'd love to hear from both Rick and Alvin on this. Rick, it's a big day for Apple here, but is Apple actually symbolically showing us what the U.S. relationship with China really is all about now?
Yeah, I mean, there's no question Apple has been really exposed to the China market, not just manufacturing, but on sales. Fifth of their entire sales is the China market, and the vast majority of their manufacturing is in China. And so, you know, they have a China problem, and the United States has a China problem, and the world has a China problem. So, yeah, it's just a part of the same narrative. And CCCP, the Communist Party of China, is you know, thrilled by that. They use economics as political tools to get what they want for their country's, you know, global interests. And so we've kind of been playing into their hand for a long time. And so companies like you know, Apple are looking at different ways of, I would say, lowering the risk of the Chinese market, both on the manufacturing side and sales. So, you know, today they announced that in addition to this new phone, that it's the first time on launch day that they are talking about selling right away phones made in India. Now, that's got more to do with China than it does to do with India. So, you know, these are both geopolitical games being played between the U.S. and China, tit for tat on sanctions, but they have real and immediate impact on companies doing business in China specifically.
Alvin, what's your take on this? What does this tell us, Apple's relationship with China, about our broader government relationship between Washington and Beijing?
Well, I think not only in D.C., but throughout the country, as you know, we're getting ready for fall and cooler temperatures, it is very evident and clear that the China-U.S. relations are just really starting to heat up. And I think this is evident of that. The decision to ban iPhones, I think, highlights just how much it's intensifying. And what we're witnessing, to be honest, is a high-stakes, you know, chip war that I think really could reshape, you know, global technology dynamics, just, you know, around the world. You know, just last month, the FBI director, Christopher Wray, spoke at the FBI Cyber Threat Summit in Atlanta and mentioned that China's hacking program is bigger than any major nation combined. And so I think that it's just, you know, very evident at this point that, you know, the real challenge will lie in finding a balance, right, between, you know, kind of economic independence and, you know, kind of this strategic rivalry. And I think it's important to remember how both nations navigate this will, you know, kind of help shape or reshape the global order.
Wow, that's saying a lot. Alvin Jordan, thank you. And Rick Davis, we're going to play this to our man in Cupertino coming up next. Ed Ludlow will join us for some final thoughts this hour. Thanks to our great panel, Rick Davis and Alvin Jordan. I'm Joe Matthew. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Biden administration is expecting a deal between the UAW and automakers and has deployed top officials to help facilitate the talks. The UAW has threatened a strike against GM, Ford, and Stellantis beginning Thursday if no agreement is reached on a new pay deal. Bloomberg Detroit Bureau Chief David Welch says there has been movement on pay.
Take all the different ways of giving these workers a raise. Somewhere around 20% over the 4 years could probably get this done. That's the best raise I've seen for union workers since I've been covering this, and it's higher than the automakers have proposed so far, significantly. So somewhere around there, give or take, could maybe get it done.
UAW President Shawn Fain has threatened to strike all three automakers simultaneously, a first in the union's history if he does not have a deal by the strike deadline. All three of the automakers are trading higher right now. Ford up 2.1%, GM up 2.6%, Stellantis, the parent of Dodge, Chrysler, Jeep, and Fiat, among many other brands. It is also higher right now, with Stellantis shares advancing by 2.4%. A number of headlines coming out of Cupertino. Apple says the AirPods Pro is being updated with a USB-C charger, and Apple is confirming the USB-C is coming to the iPhone 15 in a port switch. We've got Apple shares remaining lower as it introduces updated products. Apple down now by 1.7%. More with our Ed Ludlow coming up. I'm Charlie Pellet. Those are our company stories, and this is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Indeed, we'll head to Cupertino next to talk with Ed Ludlow, who's standing by on this Apple launch day. Thanks for joining us live from Washington. We're bringing you up to date now with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hi, Joe. The first antitrust trial pitting the federal government against a major tech company is now underway in Washington. Bloomberg's Nathan Hager has the update.
The case is United States versus Google. The Justice Department is accusing Alphabet's search giant of paying more than $10 billion a year to maintain its position as the default search engine on the web and mobile devices. Federal prosecutors say Google has been a monopoly for more than a decade and controls more than 89% of the online search market. Google denies the government's claims. U.S. District Judge Amit Mehta is expected to issue a decision next year. In Washington, I'm Nathan Hager, Bloomberg Radio.
Hurricane Lee is still at hurricane strength out in the Atlantic, and Bloomberg meteorologist Rob Carolyn is following its path.
Looks like the core of the system will be passing west of Bermuda a little bit later this week, but the big question is whether or not over the weekend it's going to affect portions of northern New England or more likely eastern portions of Atlantic Canada as we head through Saturday and Sunday as a storm transitioning from a tropical weather system into an extratropical low.
Bloomberg meteorologist Rob Carolyn. While the storm may not make landfall along the upper eastern seaboard, forecasters say rip currents are expected all up and down the coastline. Aaron Rodgers is apparently out for the season after tearing his Achilles tendon in last night's Jets game against the Buffalo Bills. ESPN is reporting an MRI today confirmed that diagnosis. Rodgers was traded to the Jets in April after spending 18 years with the Green Bay Packers. The Jets had hoped he could finally win the franchise another Super Bowl. Fans are not happy.
Every single year, there's always something. It's the Jets. It's the way the Jets work.
Amazing game, but I'm devastated.
Unbelievable. Only the New York Jets.
Rodgers' $112.5 million contract includes $75 million guaranteed for 2023 and 2024. That's according to ESPN. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe.
All right, Nancy, thank you. So, yeah, it's official. You've been hearing about it all day on Bloomberg, and we'll continue to. The iPhone 15 is part of our reality. This iPhone 14, now a paperweight, I guess. Ed Ludlow joins, I'm glad to say, from Cupertino, because he's not having a busy day. Bloomberg technology reporter. Ed, it's great to have you. Please bring me in. I'm an old man, and I'm trying to keep up. Why do we need an iPhone 15? What's different than the 14?
Yeah, it's not necessarily a question about why you need. It's like there are tens, if not hundreds of millions of consumers and users out there that have an older generation of iPhone. And what we're learning is actually the technology upgrades on the 15, the base model. Your timing's impeccable, Joe, because headlines are just rolling on the Pro, which is the highest spec variant. But we got confirmation that 6.1-inch screen iPhone 15 priced at $799. 6.7-inch plus priced at $899. They've got serious and significant camera upgrades. 48 megapixel up from 12 megapixel. They have a dynamic display at the top. And you know what we're learning is that is this enough to encourage the consumer? Maybe, but we're waiting for headlines to roll about the Pro, the more expensive models, because those tech-savvy consumers out there, that's what they're looking to hear about.
They keep making them bigger. These phones are like the size of an iPad now. I can't even hold it in my hand. I need something to fit in my pocket.
Well, Joe, you mentioned the paperweight thesis, right? The biggest technology update, many would argue, is the charger is going to go away from the Lightning charger we've all known since 2012 to USB-C, and that's not of Apple's own volition. Remember that this is a European Union mandated change with a deadline for 2024. Finally, Apple is going to have the same charger port as everyone else. Maybe it's all those cables
so the
you've been
dumbest
collecting,
thing,
Joe, that you got to change.
Yeah, all right. This is the dumbest thing I'll say today, probably, but that's my reason to get the new iPhone, because I can plug the USB thing in there. It's the little things, Ed. Thank you. And thank you for humoring me today all the way from Cupertino. Hey, we need to know what's going on here in Washington as well. You think these lawmakers walk around without iPhones? Kaylee Lines joins the conversation next. I'm glad you're with us. Live from Washington, Hour 2 of Sound On starts right now.
From our nation's capital, this is Bloomberg Sound On.
The Biden administration says we're making good on a long-held promise. Ballooning budget deficits in Washington. We're in a bizarro political world here.
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Most people, including most Republicans in Congress, understand that we need to get aid to Ukraine.
Who's going to take us in a rational way into the future and lead our country?
This has really become kind of a new frontier in American politics, is this battle between red states and blue cities.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
The impeachment probe is official. Welcome to Hour 2 of Bloomberg Sound On. I'm Joe Matthew in Washington, joined this hour by Bloomberg's Kaylee Lines as Speaker McCarthy announces an impeachment inquiry upon his return to Washington without a vote. An inquiry into President Biden over what the Speaker calls a culture of corruption. This as Congress, of course, heads for a new fiscal year without a budget and a lot of other issues to solve that we'll talk about with Senator Mark Warner, the Democrat from Virginia who chairs the Intelligence Committee, is with us in just a moment. Later on, we'll sit down with Republican presidential candidate Asa Hutchinson. He joins us here at the table on his campaign for the nomination. Let's get to it then with an update on the markets. Now Charlie Pellet has that for us. Hi, Charlie.
Thank you very much, Joe Matthew. Indeed, a mixed market right now. Apple shares, they are trading lower, down 1.7%. Apple unveiling new products in California. We do have Bloomberg's Ed Ludlow following it for us.
So we got confirmation that 6.1-inch screen iPhone 15 priced at $799, 6.7-inch plus priced at $899. They've got serious and significant camera upgrades. 48 megapixel up from 12 megapixel. They have a dynamic display at the top.
Had an interview moments ago right here on Sound On. S&P now down by 17 points, dropped there of 0.3%. The Dow up 64, up 0.2%. We've got NASDAQ down 0.8%. A lot of weakness in tech today. Again, Apple shares as it introduces new products down 1.8%. 10-year yield 4.27% with a 2-year 5.00%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you, and welcome to Hour 2 of Bloomberg Sound On. We're live from Washington as we add Kaylee Lines to the conversation. Just back from Capitol Hill, you were at the Banking Committee hearing a little bit earlier. Chairman Gensler holding forth, and we're going to talk about that in a moment. Of course, the big news today comes from Speaker McCarthy. We didn't think we'd be waking up to this morning. They talked about a big meeting on Wednesday. He might support the idea of an impeachment inquiry, but he came right out and announced one today. There will not be a vote. They're going for it.
Yeah.
the impeachment inquiry, according to the Speaker, is moving forward. And I have to wonder how the timing factors in here, knowing that the Speaker knows he has 11 legislative days between now and September 30th to try and get the government funded or a continuing resolution passed. And he's trying to figure out what he can do to cater to certain members of the right wing of his party to get that done and maybe appease them on other issues as well. We just ran a headline on the Bloomberg. Speaker McCarthy says he has a plan to avoid a shutdown.
So let's start there with Senator Mark Warner. I'm glad to say he joins us from Capitol Hill live right now on the radio and on YouTube. Senator, it's great to see you. Of course, Democrat from Virginia who chairs the Senate Intelligence Committee. We have a lot of questions for you as always, but I have to start here. If Speaker McCarthy says he has a plan to avoid a shutdown, is it called impeachment?
Well, it sure seems like it. I mean, I guess we shouldn't be totally shocked that Speaker McCarthy has got to once again cave to these right-wing folks. I think about the fact I was the CEO of a company, I was governor of a state. The idea that, 7 or 8 of these folks in the House at the far right of the Republican Party, less than 2%, maybe even less than 1% or 2%, I guess, of the overall House, is basically driving him into positions that are untenable. I'd put out the point that there was a headline in one of the Capitol Hill periodicals that said Republican leaders in the Senate basically said they didn't think this was a smart move. There was no there there. But how this somehow leads to keeping the government funded, which would be, again, if we allow a shutdown, it will be a totally self-inflicted harm driven by these right-wing folks. We're going to do our job in the Senate in a bipartisan way, pass appropriations bills. We've already passed them all out of committee. And I just do not understand some of these members on the far right who somehow act like they're fiscal conservatives, yet they don't mind shutting down the government, even though the law of the land now is, federal employees still get paid during a shutdown. So it's one of the reasons why people scratch their head about D.C.
Senator, we do want to talk about some of the specific sticking points, including funding for Ukraine, but just quickly to go back to the idea of an impeachment inquiry. Are you worried how optically this plays for the Democratic Party in 2024, these investigations into Hunter Biden and an inquiry in the House of Representatives?
Well, we have seen inquiry after inquiry launched by the Republicans since they took over this year in the House. I've seen nothing that I think has gotten much public attention. Matter of fact, most of these have been big balls of nothingness. So I think at the end of the day, particularly if this same group of far-right Republicans lead us to a shutdown, and the thing that they're going to be focused on is impeachment rather than how do we make sure that people who need passports are going to get their passports, people who want to visit our national parks and visit our national parks, people who are federal employees, air traffic controllers, for example, do their job. I think they're playing with fire.
I have to ask you about the way Democrats will handle this as well, then, Senator. We heard earlier from John Fetterman, your colleague from Pennsylvania. I won't stop you down to make you listen, but he was kind of joking around. He laughed. He said, "Oh, no, not an impeachment, not this time." Is this something that Democrats should actually try to laugh off or begin preparing a war room to deal with this?
Well, I think you've always got to take things seriously. And I know the White House will, I'm sure, put together a war room effort, and there will be some in the media that will try to present some level of equivalency that somehow whatever they're accusing the president or his family, or to my knowledge, they have no evidence, is somehow the equivalent of Donald Trump trying to stir up an insurrection on January 6th, an insurrection that's now led to, I think, 91 different indictments against former President Trump. Yeah, I'm sure people will try to make that a false equivalency. I don't think it'll pass the smell test with most Americans.
So, Senator, we know that some House Republicans do want to look at this impeachment inquiry as they're thinking about the funding battle on Capitol Hill as well. But another issue in that funding battle is on funding for Ukraine specifically. What is your message to House Republicans on that, knowing some of them would not like for it to continue?
My message is there's never been a more important time for the United States to stand with our allies. The Ukrainians are making slow but steady progress in their counteroffensive against Putin's illegal war into Ukraine. there are three common sense reasons that I think we ought to stay the course. One is, NATO was basically a tired operation before President Biden, and this conflict reinvigorated NATO that's now expanded. The idea that America would walk away from our commitment with our other NATO partners right now would be awful. Two, and this is the part that I just don't get, the very same people who say we shouldn't fund, somehow we shouldn't fund Ukraine, but we're all in against President Xi and the Communist Party in China. For people that don't understand that if Putin is somehow successful in Ukraine, that gives a greater green light to President Xi in terms of his aspirations around Asia, Taiwan in particular. If you don't see that connectivity, I don't know how better to make the case than to have that connection. And then finally, on a world stage, and I believe, on both Trump and Biden, the way we exited Afghanistan didn't burnish our international reputation. But the idea of after what happened in Afghanistan, if somehow America, in the midst of this war, when the Ukrainians have done so much more than what any of us frankly expected, where they have basically reduced our primary adversary from the 20th century, the Soviet Union / Russia, and debilitated their whole military establishment. If we would walk away from that now, why would anybody in the world, not just in Europe, but anywhere across the world, ever trust the United States again?
With that said, Senator, I want to ask you, on the eve of the United Nations gathering.
Just one last, I'm sorry, Joe, just one last thing, though. And the remarkable thing, because I do want to make clear, the vast majority of the Republicans in the Senate, and I believe the vast majority of the Republicans in the House, support continued assistance to Ukraine. So this is not simply a Democrat-Republican issue. This is that, again, far-right group that I sometimes question, who are they really for long-term in terms of America's role in the world?
As we prepare for the NATO conference, Senator, and I appreciate your finishing your thought there, what does it tell us about the relevance of the UN based on the way we've seen it handle Russia and the Security Council, the fact that it could not stop Russia from invading Ukraine, couldn't stop North Korea's nuclear program, and it's turned some smaller countries to smaller organizations that might be seen as alternatives to the UN. Speak to the relevance of this organization as we prepare to meet.
The UN that emerged after the destruction and devastation of World War II is clearly not the UN of today. I still think it is the single world body that brings, I think we're about 190 plus countries who participate in the UN. Is it perfect? No. Are there times where I think we disproportionately pay a higher share of the costs, and sometimes the larger countries are singled out? But I think it's important that we maintain a forum where countries large and small can come together. Do I wish they were more effective? Absolutely. But the idea that, again, that the best route would be to simply turn away from an international organization, I think is not the right route as well.
So, Senator, that's what one organization with many different members can accomplish. Let's talk about something that one individual member of the Senate has accomplished and continues to do so. Senator Tommy Tuberville and his blockade of military promotions and now nominations. We could be looking at a very likely scenario in which there is no chairman of the Joint Chiefs. Is it time for Democrats to take it to the floor, do it one by one, at least get those highest level people in there?
My great friend and colleague, Tim Kaine, today, and I got this secondhand, but somebody was trying to make that case, let's go one by one. And Tim Kaine said to the Armed Services Committee, he remembered his friend, John McCain. John McCain, when he was captured by the North Vietnamese, was basically because his father was an admiral, he had all these connections. The North Vietnamese offered John McCain a way out of the so-called Hanoi Hilton to let him go first in terms of returning prisoners. He said no way. He was not going to leave until all of the prisoners that were able to leave at the same time. The notion that we were going to somehow select which member of our military leadership that have earned these promotions on choosing one over the other goes against the whole sense of the military being a team organization, goes against the hundreds of years of tradition of how we treat these nominations. It is generally 99.9% of the time a pro forma process. You've had some of the Republicans start to speak out. You've got House Republicans, even Chairman of the Foreign Relations Committee, speak out against Senator Tuberville's actions, which are frankly illegitimate. I think the Ronald Reagan has to be rolling over in his grave. Ronald Reagan, who prided himself on standing up for our military when these kind of political antics are making our military less strong and our country less weak by playing politics on this issue. I hope and pray that my Republican colleagues, a lot of them have expressed concerns to me privately, that they will put the kind of pressure on Tuberville. Or frankly, we ought to maybe change the rules. But I don't think, again, there will be the 2/3 votes that change the rules. Because, again, if this gets rationalized, if this gets rationalized and legitimized, it will be used by both teams. We've seen that time and again.
You talk to him very often, Senator. I ask you that because we're going to talk to him later on today on Bloomberg TV. He's going to join us at 5 o'clock. What would you ask him?
I don't have a heck of a lot of interaction with Senator Tuberville, but I would go back to how is what he's doing any different than what happened to John McCain when he was in the Vietnamese prison and got offered a chance to get out ahead of the rest of the prisoners. The notion that I think Senator Tuberville has suggested, well, let's just selectively choose which members of the military leadership ought to get the benefits of the promotions they've earned. I don't ever think John, I believe with all my heart, if John McCain was here, he would call out this kind of antics in a way that would be extraordinarily powerful.
Senator, as there is that ongoing issue in regard to what Senator Tuberville is doing, he, I would imagine, along with you and all other 98 of your Senate colleagues, are going to be in a closed-door meeting tomorrow with a number of individuals, including several big tech CEOs like Mark Zuckerberg and Elon Musk, to talk about AI. It's closed door. It's not a public open hearing, which some of your colleagues, like Senator Elizabeth Warren, would prefer. What are you hoping to learn? And do you agree with the way that this forum is being conducted, that it is closed door?
Listen, I think this is one of the first times that you're going to have both the tech advocates and civil society in the same room. I've hosted a half dozen of these sessions, all bipartisan. I'm sure there will be lots of reporting out of what happens tomorrow. And I got to tell you, my background was in technology. I can't think of an issue in the last few years that I've spent more time on and am less certain today about what our actions ought to be. The basic economics around AI, a long time ago, 10 months ago, was whoever had the most data, the most GPUs, the most ability in cache and ability to train that data might win. Now, after Facebook has let their Llama model out in the open, and you've seen countries like the UAE for pennies on the dollar create a large language model. This is an extraordinarily complicated issue. I do think one of the things, and the good news is it's all bipartisan so far, is that there is a real sense that what we cannot do is simply what we did with social media, which was basically to say to the tech community, you guys go figure this out, and we'll try to come in and put rules in after the fact. We have batted zero on any guardrails at all around social media. I would hate to see, with the power that AI has, which would dwarf social media, not to put some guardrails. Where I'm looking, and I'm still working through this, but I'd love to hear the Bloomberg audience's reaction, because the two areas that I am most immediately concerned on in terms of these AI tools that have already been released is one, the only reason our elections work in America is because there's public trust in the elections. And there are lots of AI tools, deep fakes, other things, disinformation on steroids that could undermine the trust in our elections. The other institution that relies entirely on the public trust is what you guys report on all the time, the public markets. And the ability, we've seen some deep fake in terms of a false image of the Pentagon burning that had an effect on the market.
Yeah.
I'm amazed we've not seen more manipulation with deep fakes, with AI tools suggesting, product malfunctions that may not exist. But I think this notion of preserving the integrity of our public elections and public markets there might be a kind of a strange collaboration between capitalists and advocates of small d Democrats that would at least say on those two
We can do this,
where
Senator.
So reliant on the public space, we ought to at least put
Thanks for your time,
Senator.
Senator. As always, Mark Warner, this is Bloomberg.